Hello. Yeah, good morning to all of you. Yeah, put the full screen. Yes, good morning to all of you. So today we will do some important question that is relevant for your examination. As well as guys, we will complete the RTP revision test paper, and in the revision test paper, they have included various questions on the amendment. So we will try to cover lots of concept today that may help in your examination. And obviously in your examination, it will cover approx 30 to 40 marks in your examination. So guys, let's start with one topic. And guys, you know that always income tax, if you really want to score the exemption in income tax, 60 plus in income tax, that is direct tax of the CA final or CMA final, then you have to segregate the syllabus between 3-4 parts. One part is a computation part. Computation part include your PGBP, capital gain, after that other sources. So PGBP, capital gain, other sources. Along with that, always do the MAT, AMT, SEZ. After that, MAT, AMT, SEZ. After that, business trust, investment fund, securitization trust, and charitable and religious trust. This is your practical part. So practical part is, I have mentioned again, I am repeating. One is the business PGBP. Second is your capital gain. Third is your income from other sources. After that, MAT, AMT, SEZ, business trust, investment fund, securitization trust, and taxation of charitable and religious trust. Taxation of charitable and religious trust. And along with that, you can do the section 115 BAA, BAB, BAC, BAD, that is alternative taxation regime. So guys, that is the first topic, you can say that in our compact. So this will cover approx 40 marks in your examination. So approx 40 marks will be covered from this topic only. So if this area is a strong na, you can easily get the exemption. So this is the first segment of the income tax. Second segment is TDS TCS. Guys, TDS TCS, every time this topic will cover the 12 marks in your examination. 10 to 12 marks every time. This topic is an easy topic. Every time there will be a question of the 10 to 12 marks. So 10 marks free from the TDS TCS. Always do the TDS TCS very nicely. After that, international taxation, obviously. And in international taxation, just try to do the 5 topic only. One is the DTAA, transfer pricing, some part of the non-resident taxation, equalization levy, and BAR, that is board for advanced ruling. This 5 topic. Last 3 topic, if you do only the question na, then also it will work. For the last 3 topic, if you do only the question na, then also it will work. But for this 5 topic, you have to do the theory as well as the question. And guys, last segment is your procedural part. Now in the procedural part is the assessment procedure as well as your appeals and revision. Assessment procedure, appeals and revision, miscellaneous topic, GAR and all. For this topic, you can say that it is not that priority topic. In examination, obviously, assessment procedure will cover the 8 to 10 marks. But obviously, at the last moment, you can do that. Assessment procedure and appeals and revision, miscellaneous topic, GAR and all. That topic you can do at the end of the syllabus. So, but if you do the procedural, if you do your practical part, that PGBP and all, very nicely, international taxation part very nicely, your TDS, TCS very nicely, you can easily score the exemption in the income tax. So that what I have given you, certain the classification of your syllabus. Now guys, today we will start with one very interesting topic first, and that topic name is a TDS and TCS, and in TDS and TCS we will do the TCS part. TCS means tax collection at source, and you know that TCS, every time examiner ask question from the TCS, and TCS will cover approx 5 to 6 marks in your examination. And 101% this time you will get the question from the TCS. So just tell me the page number in compact if you are having the compact. 20. Okay, so page number 207 for the TCS. Page number 207 if you are having the compact. Then it's okay. If you don't have the compact, then also it's okay. Just focus here on the board. So guys, this TCS part, this time in your examination, is going to cover approx 5 to 6 marks. Why 5 to 6 marks this time? And why I am focusing to the TCS? Because in TCS there is some amendment, and that amendment is very important for your examination. So guys, TCS means tax collected at source, not a Tata consultancy service. So TCS means tax collection at source. TCS is applicable whenever any seller sells some goods to the buyer, then buyer will pay the consideration, and along with that consideration, buyer will pay some taxes also to the seller. That concept is called TCS. So TCS means tax collection at source. TCS means whenever seller sell any goods and seller collect a consideration from buyer, and buyer will pay the consideration, along with that buyer will also pay some component of the tax. That is called your TCS. Now guys, TCS section number of the TCS is a 206C. 206C is a section number, but in this section there are various subsection. 206C subsection 1, subsection 1C, 1F, 1G, 1H. We will discuss every subsection, don't worry about that. So first is section 206C subsection 1. Subsection 1 says that there are basically 5 goods, and on this 5 goods TCS is applicable. Now which 5 goods? First is the Tendu leaves. Say Tendu leaves. Tendu leaves. Tendu leaves is a, you know about BD, you know about BD, na? Yeah, in Tamil Nadu BD is allowed or not? Yeah, that is the Indian cigarette, you can say that. So BD. So BD is made from one leaves, that is called Tendu leaves. And you know that in market you can purchase the BD for 5 rupees also. In the market 5 rupees you can purchase the BD, na? So TCS rate on the Tendu leaves is 5%. Tendu leaf TCS rate is 5%. Now guys, in case of the timber and other forest product, if there is a timber and other forest product, then TCS rate is 2.5%. Third is a alcoholic liquor for human consumption. Alcoholic liquor for human consumption means, you know about alcoholic liquor, huh? So alcoholic, you don't know about alcoholic liquor? In Chennai there is a Tasmac shop, Tasmac only, na? Huh? Tasmac, okay, Tasmac, okay. So Tasmac, so there is a Tasmac shop that they serve or they sell actually alcoholic liquor that is for human consumption. So in every time, I know Chennai, there is a huge consumption of Tasmac, okay. So alcoholic liquor for human consumption, TCS rate is 1%, say 1%. After that, scrap, say scrap, TCS rate is 1%, say 1%. And in case of the minerals, minerals include here coal, lignite and iron ore. Coal, lignite and iron ore, your TCS rate is 1%. So guys, there are 5 product. First is a Tendu leaves. Say Tendu leaves. TCS rate 5%. Timber and forest product TCS rate 2.5%. Alcoholic liquor for human consumption TCS rate 1%. Scrap 1%. Coal, lignite, iron ore 1%. So guys, in case of this 5 product, TCS is applicable under section 206C subsection 1. And TCS rate is first Tendu leaves 5%, timber and forest product 2.5%, alcoholic liquor for human consumption, scrap and mineral, that is coal, lignite and iron ore, your TCS rate is 1%. Now I am saying that seller will collect the TCS from buyer. So suppose one person, one manufacturing company, example is United Beverages, that is UB Group. UB Group is making the or manufacturing the Kingfisher beer. So they are manufacturing liquor. So when they sell the liquor to someone, then along with the consideration, they will collect the tax from other person also at the rate 1%. This concept is called TCS. But question is that, sir, who will be the seller? Is every seller is required to collect the TCS? Answer is no. Guys, seller means, first I will tell you, seller means any person. But always remember, if individual HUF is a seller, then there is no need to collect the TCS. But suppose for individual HUF, if last year turnover was more than 1 crore, or last year gross receipt was more than 50 lakh in case of profession, then only individual and HUF is required to collect TCS. Otherwise, individual HUF not required to collect the TCS. So in this particular section, question is that, okay, sir, who is the seller? So seller means say any person. But individual HUF not required to collect TCS, but individual HUF last year turnover from business was more than 1 crore, or last year professional gross receipt was more than 50 lakh, then individual HUF required to collect the TCS. Now, Question is, who will be the buyer? So here guys, in this particular section, buyer is a any person. Means any person purchase this particular 5 product, then TCS is applicable. But there are certain exception. First exception is कि if any person is purchasing this goods for the personal purpose, means for the consumption of personal purpose, then TCS is not applicable. Means TCS is not applicable if any person purchasing this goods for the personal purpose consumption. I can take an example. Suppose you visited the Tasmac shop, that is a liquor shop, and you just purchased the 500 rupees liquor and you paid the 500 rupees. Is that person will collect the TCS from you? Answer is no. TCS is not applicable. So what I am saying that TCS is not applicable if you purchase this 5 product for your personal purpose or personal consumption, then TCS is not applicable. So in simple word, I can say that in this 5 product, TCS is applicable only if there is a wholesale sale. Means from manufacturer to wholesaler or wholesaler to retailer, then only TCS is applicable. If retailer sell to any person for the personal consumption, then TCS is not applicable. So guys, if you purchase the alcoholic liquor for your personal consumption, then TCS is not applicable. Or if you purchase the coal for your personal consumption, then TCS is not applicable. One more point, lawmaker says that suppose if any public sector company purchase these goods, then also TCS is not applicable. Now public sector company purchase these goods, then TCS is not applicable. Public sector company, example is a Coal India. So Coal India is a government company, public sector company. So Coal India used to purchase the coal from the Adani Limited. So suppose they purchasing the coal from the Adani Limited, then TCS is not applicable. Next is if central government purchasing these goods or state government or embassy or high commission or legation or consulate or trade representation or any clubs purchase these goods, then TCS is not applicable. Here guys, club means not that dance club and all. Here club means basically like Lions Club or sports club and all. So if any sports club and all, if they purchase these goods, then TCS is not applicable. One more point, guys, if buyer purchase the goods, these goods, and buyer give one declaration, and buyer is a resident. Buyer purchase these goods and buyer gives one declaration that I am going to use these goods to manufacture any other goods or for the power generation, then also TCS is not applicable. What I am saying that if buyer purchase these goods and buyer give one declaration to the seller that I am going to use these goods for manufacture of any other goods or for the power generation, then TCS is not applicable. I can take an example. There is a one company, name is a Ranbaxy. Now Ranbaxy is engaged in the manufacturing of medicine. Now they purchase the alcoholic liquor for human consumption, and suppose Ranbaxy give one declaration that we are going to use this alcoholic liquor for the manufacture of the medicine, then TCS is not applicable. Or suppose for an example, Tata Power. Tata Power is manufacturing or generating the power. Now Tata Power purchase suppose coal from any person to the to generating the power, and they give one declaration that we are going to use that coal for the generating the power, then TCS is not applicable. But now question is that sir, under this section TCS is not applicable if person purchase the goods for manufacture of any other goods or power generation. Under this section TCS is not applicable. But question is that under section 194Q is TDS is applicable or not? Because what happened under section 194Q, there is a 194Q section for the TDS, and that section says that if any buyer purchase the goods of more than 50 lakh rupees, if any buyer purchase the goods for more than 50 lakh rupees and buyer last year turnover was more than 10 crore rupees, then buyer is required to deduct TDS at the rate 0.1% under section 194Q. But under section 194Q, they have mentioned that TCS is collected under section 206C subsection 1. Then TDS is not applicable. But here in this particular case, TCS is not applicable, because if buyer give the declaration that I am going to use this goods for the manufacture of any other goods or for power generation, then TCS is not applicable. Then question is that is TDS will apply or not? Right answer is yes. CBDT clarify that, and CBDT says that TCS is not applicable due to that declaration given by the buyer that buyer is going to use that goods for manufacture of any other goods or power generation. Then TCS is not applicable. Then TDS under section 194Q will apply if other condition of 194Q are satisfied. You got my point or not? Arey, tell me yes or no. Okay, one more point. Guys, here they use the word scrap. Now, scrap means what is the meaning of scrap? There is a one case law of the Priya Blue Industries Private Limited. Now, what happened in the Priya Blue Industries Private Limited? There is a Gujarat High Court judgment. There is a one company based in the Gujarat. Now, that company was engaged in the ship breaking activity. Now, what is the ship breaking activity means? Whenever any ship is retired, then that company purchase that ship. After that, they break the ship, and whatever goods they found in that ship, they just used to sell that. Like suppose they sell the ACs, there was AC in the ship, as well as some television, TV on the ship, and they are selling to the parties. Now suppose when they were selling that TV or AC or any other part of that ship to any person, and suppose that person is using that good as such, means as it is that person is using that goods, question is that is it will be treated as scrap or not? Right answer is no, it is not a scrap. Scrap means if any person who purchased that goods, that person cannot use that goods as such or as it is, then it will be treated as a scrap. If any person purchased the AC or TV from that retired ship, then question is that person using as such? Answer is yes, then it will not be treated as a scrap. It is not going to treat it as a scrap. You got my point or not? Yes. So this is all about section 206C subsection 1. Now next section is 206C subsection 1C. And this section says that suppose if any person giving parking lot, toll plaza or mines and quarry on the lease, either parking lot, toll plaza, mines and quarry on the lease or license, then whatever lease rent they are collecting, along with that lease rent, they have to collect the 2% TCS also. Along with that lease rent, they have to collect the 2% TCS also. I can take an example of the Tamil Nadu government. Now, Tamil Nadu government used to give mines of the coal mines and lignite mines and all on the lease. So from that person, they will collect the lease rent. Along with that lease rent, they will collect the 2% TCS also. So here under this section, there is a lease or license of the parking lot or any toll plaza or mines and quarry. But guys, here in mines and quarry, any mines for the mineral oil is not going to covered. Means mine of mineral oil will not be included. Means mine of mineral oil, petroleum, natural gas, that is not included. It means here mines means mines, coal mines, as well as lignite mine, iron ore mines, that type of mines will be covered here. So here this section says that if any person is giving any mines or toll plaza or parking lot on the lease, then along with the lease rent, they will collect the 2% TCS also. Now question is that here who will collect the TCS? Means who will be the collector? So licensor will collect the TCS, but who will be the licensor? Licensor is any person. But other than individual HUF, but individual HUF also required to collect the TCS if last year turnover of that individual HUF is more than 1 crore in case of business, or in case of profession it is more than 50 lakh, then individual HUF required to individual HUF also required to collect the TCS. Now question is that who will be the collectee or licensee? So guys, here they are saying that any person other than public sector company. So if any public sector company is paying the lease rent, then there is TCS is not applicable. I can take an example. Tamil Nadu government has given coal mine on lease to the Coal India. So Coal India is one of the public sector companies. So Coal India is paying the lease rent to the Tamil Nadu government. Then TCS is not applicable. So under this section, any person is paying the lease rent, then TCS is applicable. But other than the public sector company example is a Coal India. If Coal India is paying the lease rent to the Tamil Nadu government, then TCS is not applicable. This is the section 206C 1C. Now next section is a 206C subsection 1F. Now guys, 1F you can remember by way of the Ferrari. Ferrari is a car. So this is basically related to the motor vehicle. 1F, 206C subsection 1F. Now guys, this particular section says that if any person sell any motor vehicle and value, or you can say that consideration of that motor vehicle is more than 10 lakh, then TCS is applicable at the rate 1%. Here this section says that if any person sell any motor vehicle and that value of that motor vehicle per transaction value is more than 10 lakh, then TCS is applicable. In your practical life also, suppose if you have purchased any car, and for car consideration was more than 10 lakh, then you must be remember that there was a TCS of 1%, means you have paid the TCS of 1% to the that seller, and seller collected the 1% TCS. So section 1F you will remember by way of the Ferrari, that is 206C subsection 1F. 1F is a Ferrari. Ferrari means car. So in case of the motor vehicle, if consideration is more than 10 lakh, then TCS is applicable at the rate 1%. Now question is that who will be the seller? Seller is the same, any person, but other than individual HUF. Individual HUF required to collect TCS only if the last year turnover from business was more than 1 crore or last year gross receipt from profession was more than 50 lakh. Then only seller will require to collect the TCS. Now who will be the buyer? Here buyer is a any person. But guys, other than person mentioned in the point number 1. Now if this person buy any motor vehicle, then TCS is not applicable. First is a public sector company engaged in the business of carrying of passenger. Now guys, public sector company engaged in the business of carrying of passenger. In Tamil Nadu, you know that there is a Tamil Nadu Transport Corporation. What do you call Madras Transport Corporation? Huh? TN STC. So Tamil Nadu State Transport Corporation. So Tamil Nadu State Transport Corporation is a public sector company. Public sector company means whenever there is a government and private partnership, that is known as the public sector company. So guys, if your Tamil Nadu State Transport Corporation, if they purchase the any motor vehicle for carrying the passenger, then TCS is not applicable. So TCS is not applicable if Tamil Nadu State Transport Corporation, if they purchase the buses, then TCS is not applicable. Second is if central government purchase any motor vehicle, then TCS is not applicable. Or state government. Central government means Modi ji. For Modi ji, suppose BMW car is purchased, TCS is not applicable. State government means your MK Stalin, right? MK Stalin only na? Ha. So MK Stalin, for him, suppose any car, Audi car is purchased by the Tamil Nadu government, then TCS is not applicable. Any embassy, high commission, legation or consulate or representation or local authority purchase, then also TCS is not applicable. Local authority means here Chennai Municipal Corporation. So Chennai Municipal Corporation, you know that they need the garbage truck. So they always pick the garbage in there. In North, there is a one song that Gaadi wala aaya ghar se kachra nikal. You also have that song or not here? Huh? They play this type of song? Okay, so Gaadi wala aaya ghar se kachra nikal. So here Chennai Municipal Corporation, they purchase any motor vehicle for the picking the garbage and all, then TCS is not applicable. So when TCS is not applicable under the section, if any public sector company engaged in the business of carrying passenger, if they purchase, then TCS is not applicable. Central government, state government, embassy, high commission, legation, consulate, trade representation or local authority purchase, then TCS is not applicable. One more point, guys. Here this section says that if there is a retail sale of motor vehicle, then only TCS is applicable. Under this section, if there is a retail sale of motor vehicle, then only TCS is applicable. If there is a wholesale sale, then TCS is not applicable. It means, for an example, there is a one company name is a BMW India. Now suppose BMW India is selling car to one dealer, name is a Navneet Motors. And suppose Navneet Motors selling the same car to Mr. BB. So guys, when BMW India is selling the car to their dealer, here TCS under section 1F is not applicable. But guys, when Navneet Motors selling this car to the Mr. BB, then TCS under section 206C1F is applicable. So under this section, this is very clear. TCS is applicable only whenever there is a retail sale. Means under this section on retail sale only TCS is applicable. Guys, under section 206C subsection 1, that Tendu, Lease, alcohol, there only on wholesale sale TCS was applicable. But here in this particular section, TCS is applicable only at the retail level. Means whenever there is a retail sale, then only TCS is applicable. But on the wholesale sale, TCS is not applicable. But question is that, sir, on wholesale sale, TCS under this section is not applicable. But question is that, is TDS 194Q may apply on the wholesale sale or not? Answer is yes. So if TDS under section 194Q na, then TDS under section 194Q or TCS under section 206C subsection 1H that we will discuss later, that may apply. But TCS under section 206C 1F is not applicable, because TCS under section 206C 1F is applicable only on the retail sale. Now question is that, sir, here threshold limit is a 10 lakh. Suppose for an example, I purchase one Maruti car today for the 6 lakh from one dealer. After 10 days, again I have purchased one more car for the 7 lakh. Now first car I purchased for 6 lakh. After that second car I purchased for the 7 lakh from same dealer after 10-12 days. Question is that, is TCS is applicable or not? Answer is no. TCS is applicable. You have to check the threshold limit of 10 lakh on the individual sale. Means suppose an individual sale at a single point of time sale, if that sale is more than 10 lakh na, then only TCS is applicable. Like it is not like a multiple time in a year, aggregate in a year. No. Individual sale of the car is more than 10 lakh, then only TCS is applicable. If it is not more than 10 lakh, then TCS does not apply. Okay, one more point, guys. Is TCS under this section applicable on retail sale or not? Sorry, retail sale TCS is applicable. My question is, suppose if I sold one second-hand car for the 25 lakh, is TCS apply or not? So is this section applicable only on new car? Suppose I sold one car, second-hand car, TCS apply or not? On the second-hand car, is TCS apply or not? Second-hand car. Second-hand car. Suppose I sold one BMW second-hand. My turnover is more than 1 crore of last year in case of business. Second-hand car, TCS apply or not? How many of you say that on second-hand car, TCS is applicable? Yes, TCS apply. Raise your hand. How many of you say that no, TCS not apply because it's second-hand? Right answer is why? Anna, why? We call Anna only, na? Huh? It's retail only, na? It's wholesale. Suppose for an example, Cars 24 or Ola Auto, they used to sell the second-hand car. So is TCS apply or not? On second-hand car sale or only on the first new, brand new car only TCS is apply? Okay, it was apply on the first sale. Suppose I purchased one car 3 years ago and TCS was apply. Then now if I am selling, the TCS is not applicable. It is like that. Right answer is on the second-hand car also TCS is apply, because nothing is mentioned in this section. So on second-hand car also TCS is apply. One more point, guys. Sir, suppose I purchase one car and that car price is like this. Suppose that car price, base price is 23 lakh. After that, here luxury tax on the car, because if that car is a luxury, then luxury tax is also there. After that, GST also on the luxury car, that GST rate is 28%. Question is that TCS is apply including GST or excluding GST? TCS is apply including GST or excluding GST? Right answer is, always remember, TCS apply including GST. Whole TCS topic, whole TCS topic. Whenever there is a TCS, always it is including GST, and whenever there is a TDS, that is excluding GST. Always remember, whenever there is a TCS, it's always including GST, and whenever there is a TDS, then it is excluding GST. Suppose for an example, your chartered accountant made one bill of the 10 lakh. He included the GST, total bill is 11 lakh 80,000. TDS under section 194J is applicable only on the 10 lakh. But in case of TCS, it is always including GST or inclusive of the GST. So TCS will apply inclusive GST. Okay. So this is the completion of section 206C1F. Now next section, and this section, from this section, you are going to get one question in your examination. This time in the May or June, whenever exam will happen, mostly it will be from the June only. So if exam happen in June, then you will get one question from this part, and very important question. Don't skip it. Very nice question. 2061G. How you can remember 1G? G means global. G means global. Global means they are talking about some global thing. Global. Now guys, you know about the LRS scheme? What is the LRS? LRS means liberalized remittance scheme. Now what is the LRS? Guys, our government or our RBI basically allowed us that every year individual and HUF can send money outside India for any purpose, and there is a limit of $250,000. $250,000 means how much Indian rupees? $250,000 means approx 2 crore. 80 rupees is dollar rate. So our government allowed us that if we want to send money outside India for any purpose, for buying property in Dubai, because nowadays Tamil Nadu and Kerala people, they always like have fascinated about the property in Dubai. And nowadays if you purchase the property in Dubai, and if it is more than 10 lakh dirham of Dubai currency, then you will get the golden visa also. For the 10 year, there is no need to take visa. That is one scheme of the Dubai government. So guys, nowadays, every person wants to purchase the property in Dubai or purchase the property in Thailand or Sri Lanka or any other country. So our government want to check that where person is spending the money. So for that purpose, they have introduced one section 206C, subsection 1G, and under this particular section, there are various amendments from this year. And this amendment will be covered by ICI in this examination. In the RTP also, there is a one case scenario only based on this particular section 206C, subsection 1G. You have to remember this section because in exam, you will get the question. Now, lawmaker says that, suppose if you are remitting money outside India under the LRS scheme, individual and HUF allowed to send money outside India, and every year there is a limit of $250,000, but that limit is as per the ICI, sorry, as per the RBI. For our income tax, there is no such limit. Okay, in income tax, obviously they will not, you are not required to remember that $250,000 limit. That is limit as per LRS scheme. Now try to understand. This section says that if any person sending money outside India through authorized dealer. Now authorized dealer means bank. Normally we can send money outside India through bank only, ICICI Bank, Kotak Bank, HDFC Bank. So through bank you can send the money outside India. Now guys, here this section says that if you are sending money outside India for any educational purpose or medical purpose and sending money more than 7 lakh in a year, then up to 7 lakh, there is no TCS. And in excess of 7 lakh, there is a TCS of the 5%. What this section says, try to understand. This section says that, hey guys, one more point. In motor vehicle, you know that there was threshold limit of the 10 lakh. Suppose I purchase a car of 20 lakh, then TCS applicable on total 20 lakh or only 10 lakh? Huh? Total 20 lakh, na? So there was not a slab of 10 lakh. So if it is more than 10 lakh, then total 20 lakh TCS is applied. But guys, here there is a slab. This section says that if any person sending money outside India for any educational purpose or medical purpose, then in excess of 7 lakh, that TCS is applicable at the rate 5%. Now I can take an example. Suppose my son is studying in Ukraine. Example, this is just a... My son, or suppose my brother is studying in Ukraine, and I have sent him the 12 lakh in a year for the education purpose, then up to 7 lakh TCS is not applicable. In excess of 7 lakh, there is a 5 lakh. So on 5 lakh, 5% TCS is applicable. So if any money sent outside India for the educational purpose or medical purpose, then in excess of 7 lakh, TCS is applicable at the rate 5%. Now guys, if you are sending that money outside India for educational purpose, and suppose if you have taken the educational loan and only that loan money you are sending outside India, then guys, here TCS rate will be only 0.5% instead of 5%. Means TCS rate will be only 0.5% instead of 5%. I can take an example. Suppose I have taken the loan from the HDFC Bank, educational loan, and that same money I am sending outside India for the educational purpose, then TCS rate is only 0.5% instead of the 5%. So normally in case of education and medical, TCS rate is 5%. But if you have taken the educational loan and if same money is remitted outside India, then TCS rate is 0.5% instead of 5%. Now one more point. Here it is an amendment. Try to understand. Suppose you are sending money outside India for any other purpose. Any other purpose means for buying the property in Dubai, or suppose for buying any other asset outside India, or suppose if you have started any account outside India, or if you purchase the shares of the Microsoft, or if you wish to purchase the shares of the Tesla, and for that purpose you are remitting money outside India, then guys, here TCS rate was 5% up to 30th September 2023. But from 1st October 2023, that TCS rate is raised to 20%. But limit, obviously 7 lakh is a base limit, means up to 7 lakh there is no TCS. Now in excess of 7 lakh, earlier that TCS rate is 5%, means up to 30th September 2023, that TCS rate was 5%. But from 1st October 2023, that TCS rate is 20%. So now TCS rate is 20%, earlier it was 5%. Now, one more point. Again, try to understand. We will revise this part. That is 206C subsection 1G. 206C subsection 1G says that suppose if any person sending money outside India under LRS scheme, and obviously an individual HUF only can send the money outside India under LRS scheme. Under LRS scheme, if you send the money, if you sending that money for the medical or educational purpose, then guys, for the whole year, that rate is the same. Only 5% is rate in excess of 7 lakh. But suppose if money is sent for any other purpose, to buying the property outside India, or suppose to purchase the shares of foreign company and all, then guys, 5% rate was in excess of the 7 lakh up to 30th September. But from 1st October, that rate is changed to the 20%. So now rate is at 20% on or after 1st October 2023. Earlier that rate was 5%. You have to remember the date also. You have to remember the date also, because examiner will ask you the question. So you have to, because he will give you some, like he will give you some detail. Okay, that person sent the 5 lakh on this date, 6 lakh on this date, 10 lakh on this date, 15 lakh on this date. Just calculate what is the TCS amount. So you have to remember the date. So for any other purpose, if you are sending money outside India other than medical or educational purpose, up to 30th September, this rate was 5%. But from 1st October, this rate is at 20%. Now guys, under section 206C 1G, there is a one more point that is related to the OTPP. OTPP means Overseas Tour Package Program. What I am saying that? Overseas Tour Package Program means, suppose if you want to visit foreign country for your honeymoon, and if you purchase any package, then TCS is applicable. Now guys, here under this section also there is an amendment. Earlier this section up to 30th September, this section says that TCS rate was 5%. There was no base limit of 7 lakh here. Under OTPP, Overseas Tour Package Program, there is no limit of 7 lakh. Even if you purchase any Bangladesh package of the 2 lakh rupees, then also TCS is applicable at the rate 5%. But they have amended this part, and from 1st October, they are saying that if you purchase any package and that package value is up to 7 lakh, then TCS rate is 5%. But if that package value is more than 7 lakh, then on the excess amount, TCS rate is 20%. So in case of the OTPP, there is a change in case of OTPP also. And what is the change in case of OTPP? In case of OTPP, change is, suppose if you purchase the package, before 1st October 2023, then whatever the value of the package, TCS rate was 5%. Whatever the value of the package, TCS rate was 5%, but on or after 1st October 2023, if your package is up to 7 lakh, then TCS rate is 5%, but package is more than 7 lakh, then TCS rate is 20%. So suppose for an example, I purchased that package from the Thomas Cook, or I purchased the package from Make My Trip, and I have paid the amount of the 10 lakh. then TCS is applicable. Up to 7 lakh, 5%, and in excess of 7 lakh, there is a 20% TCS rate. This is the amendment in this section. Okay, one more point. Guys, this section is not applicable if TDS is deducted under any section. If TDS is already deducted now, then this section is not applicable. I can take an example. Suppose for an example, one student scored the All India rank 1. Now BB Virtual, our classes sponsor him the Singapore trip. So when we sponsor him the Singapore trip, we purchase the Singapore package and we have deducted TDS under section 194C under the contract. If we have already deducted the TDS, then that person will not collect the TCS. TCS is not applicable. Or guys, suppose if this package and all is purchased by the central government, state government, embassy, high commission, legation, consulate, trade representation and local authority, then TCS is not applicable. And one more point, if any person non-resident visiting India, that person purchased the package, then TCS is not applicable. I can take an example. Suppose one person from foreign, he just came to India and non-resident visiting India, and suppose he purchased one Singapore package, or suppose he purchased Bangladesh package, or from India he purchased the Sri Lanka package, then TCS is not applicable. So non-resident visited India, and after visiting India there may be possibility he will purchase one package for the foreign currency travel, then TCS is not applicable. One more point guys, OTPP. What is the meaning of the OTPP? OTPP means when you purchase any package include your traveling, your hotel, as well as other expenses and all also included in package. Only that will be covered in the OTPP. Suppose if you only purchase any flight ticket or only book the hotel, then TCS is not applicable. If you purchase only flight ticket or if you purchase only hotel booking, then TCS is not applicable. Only when there is a package then only TCS is applicable under this section. Now one more point, guys, there are certain CBDT clarification. CBDT clarification says that suppose if you are having any overseas credit card means international credit card. Now I am having international credit card. Last month I visited Dubai, and in Dubai I made some payment from the international credit card. Question is that on that payment is TCS is applicable or not? Because that also spend will covered in the LRS scheme. Is TCS is applicable or not? CBDT clarify that till our further clarification, TCS is not applicable. But in future they may apply the TCS on this payment, but till their further order, TCS is not applicable on the international credit card. Now second point, sir, question is that all people pay attention, a very interesting part. Suppose for an example, today I send 10 lakh rupees to UK through the Kotak Bank under LRS scheme. So Kotak Bank will collect the TCS on 3 lakh or total 10 lakh? 3 lakh or total 10 lakh? 3 lakh. 7 lakh is exemption, so 3 lakh TCS is applicable. Tomorrow again, I want to send some money, and now I am sending money through the HDFC Bank, and again 10 lakh. So question is that HDFC Bank will collect the TCS on total 10 lakh or again only 3 lakh? Like I am sending money through different dealer, different authorized dealer. Like example is Kotak Bank, ICICI Bank, HDFC Bank and all. First day I send the 10 lakh and TCS apply only on 3 lakh. Second day again I am sending 10 lakh but through different dealer. Question is that is TCS apply or not? Yes or no? TCS is apply, but on what amount? Total 10 lakh or only 3 lakh? How many people says that total 10 lakh? Okay, very good. Right answer is total 10 lakh, because from this year they made one amendment and they clearly mentioned that whenever you will send money through any dealer, then dealer will ask about one self-declaration. And in that self-declaration, you have to mention about whatever remittance you already made in the current year. So suppose first I have sending the money through the Kotak Bank and 3 lakh TCS is applicable. Second day I visited HDFC Bank sending 10 lakh. Then HDFC Bank will ask me to sign one self-declaration. And in that self-declaration, I will mention that 10 lakh already I sent through the Kotak Bank. Then HDFC Bank will collect the TCS on total 10 lakh rupees. They are going to collect the TCS on total 10 lakh rupees. Okay, one more point is, guys. One more point. Sir, question is that you mentioned that for the educational and medical purpose, Up to 7 lakh, there is no TCS. More than 7 lakh, there is a 5% TCS. For any other purpose, up to 7 lakh, there is no TCS, but more than 7 lakh, there is a TCS of 5% or 20%. Now, question is that, sir, this 7 lakh limit will be applicable separately for educational purpose, medical purpose, other purpose, or it is a combined limit of 7 lakh. Means I can take an example. Suppose I have sent 10 lakh for the educational purpose, 7 lakh for the medical purpose, 10 lakh for the purchasing the property outside India, 10 lakh for the purchasing share outside India. So is I will get the 7 lakh, 7 lakh, 7 lakh on each payment, or only one 7 lakh? Right answer is only one 7 lakh. So this 7 lakh limit is for the combined remittance outside India for the medical purpose or educational purpose or any other purpose. If that limit is cross of 7 lakh rupees, then guys, on the excess amount, TCS is applicable under this section. Okay. Now one more point, guys. Question is that they are talking about the educational purpose. Now, what do you mean by the educational purpose? So educational purpose, they have defined. So educational purpose include remittance for the purpose of the tickets. Means whatever amount, suppose my brother is visiting outside India for educational purpose. So whatever his flight ticket expenditure, that will also be covered in the like educational purpose, or tuition fees outside India, or other fees to be paid to the educational institution, as well as the other day-to-day expenses also. Other day-to-day expenses required for the undertaking such study. So suppose my brother is studying in Ukraine and every month he need 20,000 rupees for his other day-to-day operation, day-to-day expenses. Is that will also be treated as educational purpose or not? Answer is yes. That will also be treated as educational purpose. Now medical purpose. So medical treatment include the remittance for the purchase of the ticket of the patient and his attendant, as well as his medical expenses and other day-to-day expenses required for such purpose. So suppose for the medical treatment, one person is visiting outside India for medical treatment, one attendant is also with him. So his attendant and his both ticket will covered in the medical treatment, his medical expenses and other day-to-day expenses required for such purpose will be covered as a medical expenses. One more point, guys. Only overseas flight ticket is booked or only hotel is booked, then it is not covered in the OTPP. After that, here 8 example is given. After that, in your book, 8 example is given. I am going to give you 2 minutes time. Just read all 8 example, and if you have any doubt, then you can ask me. Just read all 8 example. Just read all 8 examples, and if you have any doubt, then you can ask me. हाँ, बोलना. Your doubt will be covered in the first question of the RTP. We'll do that. हाँ, मैं अभी करा रहा हूँ. Sorry, loan transfer, educational purpose. हाँ, loan is just to track the transaction. Obviously, you can take the credit of same, na. Suppose for an example in TDS, if I withdraw cash from bank more than 1 crore, TDS is applicable 2%. Why? This is not an income. I'm just withdrawing the money for expenditure purpose. Why they deducting TDS? They just want to track the transaction. That's it. That's why the rate is very less. Okay. Any other doubt? If you have any other doubt, you can ask me. Huh? You have done all 8 all 8 question. Arey, tell me yes or no. All 8 completed. Yes or no. Arey, say yes. Okay, last question, last section 206C 1H. Say 1H. 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 This section says that, suppose if any seller, say seller last year turnover was more than 10 crore. Seller last year turnover was, and he is selling some goods to any buyer, and from buyer he is collecting the consideration. Say collecting the consideration. And if that consideration is more than 50 lakh, then TCS is applicable at the rate 0.1% in excess of 50 lakh. What this section says that, try to understand. Here guys, seller is any person whose last year turnover was more than 10 crore. He is selling goods to any buyer, buyer purchasing the goods, and when buyer pay the consideration, then at the time of collecting the consideration from the buyer by the seller, seller will collect the TCS at the rate 0.1% in excess of the 50 lakh. So suppose I am a seller, I sold some books to the any buyer, and from that buyer I am collecting the consideration, and suppose I collected the consideration in current year of 70 lakh rupees, then TCS is applicable on the 20 lakh rupees at the rate 0.1%. Now in this section, if buyer is a central government, state government and all, then TCS is not applicable. As well as guys, if you import the goods or export the goods, then TCS is not applicable. So remember, in case of importing and exporting the goods under section 206C 1H, TCS is not applicable. Okay, one more point guys. Guys, just tell me, first if we talk about the TDS, when we have to deduct the TDS, means at what moment we have to deduct the TDS? At the time of payment or crediting the party, whichever is earlier. But guys, you know that in TDS there are certain exceptional cases. One is the salary, one is the EPF payment, one is the dividend, one is the winning, one is the compulsory acquisition of like capital asset, one is the bank note withdraw from the bank, cash withdraw from the bank. There only TDS is applicable at the time of payment. Now question is that, sir, when we have to collect the TCS, means at what moment we have to collect the TCS? Guys, TCS also same. TCS has to be collected at the time of debiting the party or receive the consideration whichever is earlier. Say debiting the party or receive the consideration whichever is. But guys, there are two exceptional cases. One is the 206C 1F. 1F is a Ferrari motor vehicle. And one is the 206C 1H. 1H is the last section. In this two section, TCS is applied only at the time of collecting the consideration. Means when you collect the consideration now, only that time TCS is applicable. Means at the time of debiting the party, TCS is not applicable. So guys, for an example, I am a seller. I sold the books of the 90 lakh to someone. 90 lakh rupees books sold to someone. My turnover of last year is more than 10 crore. I collect the consideration only 70 lakh in the current year. Guys, TCS is applicable only on the 70 lakh. Means out of 70 also 50 lakh TCS is not applicable. Only on 20 lakh TCS is applicable. But guys, if you check the corresponding section 194Q in the TDS, then under section 194Q, TDS, if TDS is applicable now, then TDS will apply on total 90 lakh. Because in that section they mention TDS is applicable at the time of debiting the party or payment, whichever is earlier. So under section 194Q, TDS is on 90 lakh. But if you talk about the TCS, then it will be applicable under section 206C subsection 1. Only consider the 70 lakh, because only at the time of received the consideration, TCS is applicable under section 206C 1H. One more point. Guys, you know that in the TDS, if any payee not submit the PAN number, then TDS will be deducted at the rate. If any person not submitted the PAN number or Aadhaar number, then TDS is deducted at the rate. Miss TDS rate or 20%, whichever is higher. TDS rate or 20%, whichever is higher, na? Ha. TDS rate or 20%, whichever is higher. But you know that in that section, there are two exceptional cases. One is the 194O and 194Q. In those section, instead of 20%, you have to take the 5%. Now question is that under TCS, sir, suppose if any buyer is not giving the PAN number or Aadhaar number, then at what rate TCS will be applicable? So guys, here TCS will be applicable at the rate twice the rate or 5%, whichever is higher. What I am saying that twice the rate or 5%, whichever is higher. Twice the rate or 5%, whichever is higher. So for an example, if any person is selling the alcoholic liquor for human consumption. Now guys, on alcoholic liquor for human consumption, your TCS rate is 1%. Suppose buyer is not giving the PAN number, then TCS rate is 2% or 5%. Higher comes to 5%. 5%. Now on the Tendu leaves, TCS rate is 5%. Suppose PAN number is not given, then 10% or 5%. Higher comes to 10%. But guys, always remember, under section 206C subsection 1H, that TCS rate was 0.1%. If PAN number is not given, then TCS rate will be maximum 1%. Maximum 1%, not a 5%, maximum 1%. One more point, in this section, they made one amendment from this year, and this section says that from 1st July 2023, guys, your maximum TCS rate can be 20%. Maximum TCS rate can be 20% because under LRS scheme, you know that LRS scheme and OTPP, the TCS rate is now 20%. Huh? Suppose PAN number is not given, then twice the rate will be 40% and 5%, whichever is higher is 40%. So question is that is TCS applicable at the rate 40%? Answer is no. TCS will be applicable maximum 20%. You got my point or not? Just check your RTP question number 1. Just check your RTP question number 1. Just check your RTP question number 1. So there is a question number 1. Check this question. Just read once. Everyone, please read this question. Yes, people. So just check the question number 1. Very interesting question. Try to understand. The following detail pertaining to Mr. Sahil and his best friend, Mr. Akhil. So this detail is given of the two friends. One is the Sahil and Akhil. First is of Sahil. Now Sahil, amount remitted to his elder son Arav, who is pursuing 2 years MBA program from the Columbia University of USA. So his elder son, Mr. Arav, is doing the MBA from Columbia University, USA. Now, how much money he is sending outside India under LRS? Try to understand. Out of the own saving through the HDFC Bank, a authorized dealer under liberalized remittance scheme LRS of the RBI, towards the tuition fees of the 5th July, on the 5th July 2023, he is sending 3,50,000. So guys, under LRS scheme, out of his own saving means he has not taken any loan. So out of his own saving, he is sending on the 5th July 2023, 3,50,000 for educational purpose. Second is, to meet day-to-day expenses for the study purpose. To meet day-to-day expenses for the study purpose, he is sending on 10th May 2023, he is sending 1,20,000. 29/9/2023 he is sending 90,000, and on the 1/1/2024 he is sending 1,35,000. So guys, to meet day-to-day expenses for the study purpose, so it will also included in the educational purpose only. Yeah. So if any money is sending for the day-to-day operation or day-to-day expenses for study purpose, it will be covered in the educational purpose only. For the rate purpose, TCS will be 5%. Now next part. Through Axis Bank also, an authorized dealer under LRS out of loan towards the tuition fees. So he has taken the loan, educational loan, and under the out of the loan, he is sending on the 10 October 2023 3,50,000 and 10 January 2024 3,50,000 out of the educational loan. Now own saving to meet the day-to-day expenses on 1st July 2023, he is sending 1,50,000 through the Axis Bank. Now next part. To complete the formalities of the admission, Mr. Sahil visited the USA from 10th April 2023 to 13th April 2023, for which he purchased a tour package from Messrs. Get to Travel, a foreign tour operator, and remit money under LRS on 1/5/2023. International travel, ticket and hotel accommodation are included in that package. So guys, when he visited USA, he purchased the OTPP, Overseas Tour Package Program, but he purchased the OTPP from the foreign tour operator. Now guys, even you purchase the tour package from any operator, if you are a resident, then TCS is applicable. Only TCS in case of OTPP is not applicable when non-resident visiting India, and that time he purchased any OTPP, then TCS is not applicable. Here this person is resident, so even he purchased the package from the only non-resident tour operator, then also TCS is applicable. So here TCS is applicable on 5,20,000. Now we will check it. Mr. Sahil has furnished undertaking containing the detail of earlier remittance to the HDFC Bank as well as Axis Bank. He has also furnished his PAN number to the authorized dealer and to the seller of the overseas tour package program. Now how TCS will apply? We will check one by one remittance. Okay. So guys, our standard rule is that if you are sending for the educational or medical purpose, then TCS rate is in excess of, and for the other purpose, then earlier the TCS rate was 5%, but from 1st October TCS rate is 20%. Now guys, just tell me, and for educational purpose, if you are sending from loan money, then 0.5%. Just tell me, when he sent the first time money outside India? 1st July? First remittance. 1st July or 15th April? He's, OTPP is different. OTPP will not be covered in this. That is just, we will check the remittance. OTPP. Guys, on the OTPP, we can understand first. So on the OTPP, on the 10th April, he booked one OTPP of the 5,20,000. Then guys, on this TCS is applicable at the rate 5%. Earlier that rate was flat percent 5%. Now also flat rate is 5%. But if your package is more than 7 lakh, then TCS rate is 20%. So on 5%, then what is the TCS amount? 10,000. So 10,400 TCS applicable on 5,20,000 of the OTPP. Now guys, question is that, try to understand one point. How you calculated 10,000 for? You added 2%. Why? Nirmala Sitharaman ji from Chennai, but she is not allowed to make you law till now. Okay? He is saying Nirmala Sitharaman ji from here only. Nirmala Sitharaman from Chennai only, na? Okay. So what is it? 26,000? 26,000 TCS. Okay, one more point, guys. One more point. All people pay attention. For an example, I purchased the OTPP. Suppose I am going to visit Switzerland. Example. Okay? Never visited Switzerland. I don't have passport, but just an example. Okay, suppose I visited Switzerland, and for Switzerland, I purchased one package from the Thomas Cook, and that package amount is a 50 lakh. And guys, in that package, they have given various facility like flight booking as well as hotel booking, as well as they have given one facility that they will give me money in Switzerland. Means suppose they will give me out of that 50 lakh, 15 lakh money they will give me in the Switzerland to the spend locally. That is part of package. Now on whole package, they have collected the TCS, suppose. They have collected the TCS on whole package. And when they collected the TCS on whole package of the 50 lakh, and under that package, they are sending money outside India also under LRS, because they have to give me some money in the Switzerland to spend. So question is that, is again TCS will be applicable in that LRS point or not? Answer is no. Answer is no. Means when if you purchase the package and on the package TCS is applicable, then in that package, in part of that package, suppose there may be possibility some money they are sending outside India also for your spend purpose or to like spend in the foreign country, and that is a part of package, then again TCS will not be applicable by authorized dealer. So it's very simple, and this is given in the compact also. If you read that line very carefully, now here I have mentioned this line, try to understand, directly check on the board only. Here I mentioned one line. Okay, suppose if authorized dealer not collect TCS on amount in respect was TCS has been collected by the seller. So when the seller collected the TCS on the OTPP, then guys, this authorized dealer is not required to collect the TCS on that amount. So if I purchase the package of the 50 lakh, now in that package there is a part ke 10 or 15 lakh they will give me in the Switzerland. So they will send through the any authorized dealer. So is authorized dealer will collect the TCS? Answer is no, because on your total package TCS is already collected by the seller of the OTPP. Now again read this RTP question. So now first is that OTPP 26,000 TCS is applicable. That is very clear. After this, just tell me first remittance on which date? 10th May. Huh? 10th May 1,20,000. Huh? For the study purpose. So can I say that 1,20,000 TCS is not applicable because it is covered in the 7 lakh limit? Huh, bhai? No TCS. Now after 10th May, second is remittance is on? Huh? 1st July. 1st July. Yeah. Day-to-day expenses 1,50,000. Then also TCS is not applicable because 7 lakh limit is not cross. No TCS. After that, after 1st July, 5th July, amount is 3,50,000. Now just combine this amount 120, 150 and 350 also. 6 lakh. So can I say that on 350 also no TCS? TCS is not applicable. Okay. Now guys, next to 5th July, next amount is 29. So can I say that on 29 September when he is sending the 90,000, so out of 90,000 on 80,000 TCS is not applicable? Huh guys? For 80,000 there is no TCS. But guys, on the remaining 10,000 TCS is applicable. And guys, TCS is applicable because this is for educational purpose, but from own saving. So TCS is applicable at the rate 5%. So 5% comes to 500. Huh? 500. Okay. After that, just tell me the which amount after 29 September. 11th October. So this two payment, one is the 11th October, but this is out of the tuition fees, that is out of the loan amount. Huh? So TCS is applicable only at the rate 0.5%. So 3,50,000 multiplied by 0.5%. Huh? 1750. Okay. After that 11th October, next date is 1st January, 1,35,000. But that is also for educational purpose. So can I say that TCS is applicable at the rate 5%? So 1,35,000 multiplied by 5%. 6750. After that 10 January. So 10 January, this is educational purpose out of the loan amount. So 1750 only. So I think all we have covered, right? So how TCS will be applicable? So in simple word, here HDFC Bank will collect the TCS is, one is the 500 and 6750. 500 and 6750. Axis Bank will collect the 1750, and guys, here he purchased the OTPP, so they will collect the 26,000 as a TCS. Done. Now we will check the answer of this question. So just check the first question. Is HDFC Bank is required to collect the TCS on the amount remitted by Sahil? If so, what is the amount of tax to be collected? Right answer is HDFC Bank will be collect or not? So here HDFC Bank is on the 500 rupees on 29 September and 6750 on the 1st January. Right? Arey, tell me yes or no. So can I say that C answer is correct? You know that guys, in the MCQ, always C will be on the majority. In the MCQ. Because if you check the random data of MCQs, just take any random 1000 MCQ. There will be the probability of C will be approx 35 to 40%. 35 to 40% will be the probability of C. After that, second probability will be of the B. Third probability of the D. And last probability of the A. Why it is? Is there is any scientific basis behind this? Or just? Because whenever suppose you are an examiner and you are setting MCQ. So when you set the MCQ, obviously you will not give your first right answer in the first point only. You will never give. Suppose if you are setting MCQ, just try to understand. If you are setting MCQ, then right answer you will not put in the A option. You will either drag to B or C. And last option can be right only if all of the above is there. Then D can be right. Otherwise, D also. Like least probability. So first probability C, second probability B, third probability D, and fourth probability A. So in examination, if you don't know the answer, then put the C, because there will be a 35% probability to get it right. Okay. Now next part, point number 2, second question. Is Axis Bank is required to collect the tax at source on the amount remitted by Sahil? If so, what is the amount of tax to be collected? So guys, Sahil, is HDFC Bank will be required to collect TCS or not? Sorry, Axis Bank. So can I say that 1750, 1750? Huh? So here answer also C. So I told you, na? C is having the highest probability. Now next part. Is tax is to be collected at source on the amount remitted for the tour package to USA by Sahil? If so, what is the amount of tax to be collected? So, So 26,000. So A is the right answer. Now you will say no, A will never. A will come, na? Sometime A may also be right. But least probability. Now next part. Next part. Okay. Now next is Akhil. Akhil we have not discussed. All people pay attention. Here. Mr. Akhil is an Indian citizen. Got a job offer from the Wellbeing Inc., a Dubai-based company of the AD 10,500 per month. So he is an Indian citizen. He got some job in the Wellbeing Inc., Dubai-based company of AD 10,500 per month. He left for Dubai on the 29 March 2023 only and joined the Wellbeing Inc. on the 1st April 2023. So guys, he left in last year only, 29 March 2023. He joined the job on the 1st April 2023. He returned to India on the 15th December 2023 on the leave of 15 days. So he came India for 15 days only for the leave. On 23rd December 2023, he went on the 7 days tour to Bali with his wife and son. And thereafter, he directly went to Dubai with his wife and son. On 16 December 2023, he purchased a tour package for Bali from the Make Your Trip, a Indian tour operator, for which he paid the 7,50,000 towards the flight ticket and hotel accommodation. During the financial year 23-24, he has a business income of 4,20,000 from retail shop in India, and interest on fixed deposit and saving account with the Canara Bank is 1,20,000 and 8,000 respectively. He is not liable to pay tax in Dubai. Assume one AID is 23. Now guys, just tell me what is the residential status of the Akhil. Now Akhil in India, Akhil came for only 15 days. But out of 15 days also, he was not in 15 days in India. Because on 15 December, he came 15, 16, 17, 18, 19, 20, 21, 22 and 23. On 23, he went to Bali. So he was in India only for 9 days in a year. So can I say that as per section 6(1), both basic conditions are not satisfied? First basic condition is stay in India for 182 days or more in the previous year. And second basic condition is stay in India for 60 days or more in previous year and 365 days or more in the last 4 previous year. So can I say that the basic condition is not satisfied? So he is non-resident. But guys, there is a one section is called section 6(1)(a), deemed resident. Now what deemed resident says, you know that if any person is an Indian citizen and he is not liable to pay tax anywhere in the world due to his residency or due to his domicile, then he will be treated as deemed resident of India if his Indian income is more than 15 lakh. If his Indian income is more than 15 lakh, then he will be treated as deemed resident of India. So there is a one section 6(1)(a). That section says that if any person is an Indian citizen, he is a non-resident as per 6(1), and he is not liable to pay tax in anywhere in the world due to his residency or domicile, then he will be treated as deemed resident of India. He will be treated as deemed resident of India if his Indian income is more than 15 lakh rupees. Now guys, in this particular case, what is his Indian income? So his Indian income is in India, his income is 4,20,000 from the retail shop, as well as from the fixed deposit he is having the 1,20,000, and saving account he is having the 8,000. So can I say that his Indian income is only 4,20,000, 1,20,000 and 8,000? Total comes to 5,48,000. Now question is that is he eligible to claim the 80 TTA deduction or not? 10,000 on saving bank interest. अरे रे रे ये क्या हुआ, मैंने ना ये जाना. 4,20,000 is his business income. FD interest is 1,20,000. His saving bank interest is 8,000. Total is 5,48,000. Now my question is that suppose if he is following 115 BSc, then you know that if 115 BSc, then your deduction is not available. But suppose if he is not following 115 BSc, then deduction is available. But question is that is 80 TTA available for non-resident or not? Right answer is yes, 80 TTA is available. 80 TTA is available, and his net taxable income as per the normal provision will be the 5,40,000. Guys, if you see the deduction topic now, then 80 TTA is applicable for the individual. Word is used as individual, and you have checking that section. Individual and HUA. But 80 TTB is applicable only for resident individual. 80 TTB for senior citizen, that deduction for 50,000, that is applicable only for senior citizen. But this is applicable for the non-resident also. And senior citizen means resident only. So 80 TTB applicable for resident only, but 80 TTA may apply for the non-resident also. So here 8,000 is deduction. So net income is 5,40,000. This is not more than 15,000. This is more than 50 lakh. So that person will be treated as non-resident in India. So what is the question of ICA? Just tell me. Just check the question. First is, does make your trip required to collect tax at source on the amount received for the tour package to Bali from Akhil? If so, what is the amount of tax to be collected? Today we have discussed that if any non-resident visited India and he is purchasing OTPP, then TCS is not applicable. So here he is a non-resident, and when he is purchasing the OTPP, then TCS is not applicable. So B is the right answer. Now next part. What is the total income of Mr. Akhil for the assessment year 24-25? Assume he has shifted out of the default taxation regime. Now he is not opting the 115 BSc. So 115 BSc is not opting. Then his income will be 5,40,000. So 5,40,000 is right answer. 5,40,000 is right answer. And last part. What would be the amount of the tax liability computed in the most beneficial manner of the Akhil for the assessment year 24-25? Guys, whenever they say the most beneficial manner, then you have to calculate as per 115 BSc also and non-115 BSc. Now try to understand, there is a very interesting part. His income as per normal provision, we calculated 540. So as per 540, calculate tax up to 2,50,000, there is no tax. And more than 250, up to 5 lakh 12,500, and more than 5 lakh up to 5.4, 20% comes to 8,000. So here total comes to 20,000. 87A rebate is not available because income is more than 5 lakh. So 87A rebate is not available. So here 20,500 plus 4% health and education cess. It comes to the 21,320. So as per normal provision, his tax liability is 21,320. If he opt out from 115 BAC. But if you follow 115 BAC, then can I say that his net taxable income is a 548? Because deduction not available. And guys, you know that under 115 BAC from this year slab rate is changed. And slab rate is 3 lakh, 6 lakh, 9 lakh, 12 lakh and 15 lakh. What I told you? 3 lakh, 6 lakh, 9 lakh, 12 lakh, 15 lakh. And rate is a 5%, 10%, 15%, 20% and 30%. There is no 25%. What I am saying that 5%, 10%, 20, 5%, 10%, 15%, 20% and 30%. And slab rate is 3, 6, 9, 12 and 15. So guys, on 5,48,000, can I say that up to 3 lakh there is no tax? Or say yes. And 3 lakh to 5,48,000 multiply by 5% comes to 12,400. Now 12,400. Now guys, there is a one rebate 87A. Now you know that in the normal case, your rebate 87A is applicable if your net taxable income is up to 5 lakh and rebate amount is 12,500. But under section 115 BAC, this rebate is changed. And this rebate is applicable if your total income is up to 7 lakh and rebate amount is 25,000. But guys, this rebate is applicable only for resident individual. And here this person is not a resident individual. Here this person is a non-resident. Here this person is a non-resident. So that rebate is not applicable. 12,400 plus 4% comes to 12,896, or I can say that the 12,900. So guys, 12,900 is a more beneficial section, that is 115 BAC. So here 115 BAC 12,900 is the right answer. That is the question number 6. Question number 6, right answer is 12,900. Done? Any doubt if you have in this question, then tell me. Foreign Sahil case. They have to. Nowadays they clearly mention they have to, but there is a practical difficulties in this collecting the TCS. But law says that they have to, because exception is not given for that. Yes, sir. Please listen. He is saying something good. Wife and son are resident. Okay. If wife are resident, then husband should be resident, like this. Wife is resident. Son is also resident. No, but who made the payment? Ultimately, we will check that who made the payment. Suppose your girlfriend is from Philippines and she just came to India to meet you. After that, you purchase the package for her. Then TCS is applicable because you purchasing the package, na? You making the payment, na? Done? Okay, guys. Now, this was all about the TCS, and we did one very good question from the TCS. And on this part, you will get the question in your examination. Now guys, yes. So basically, in today's lecture, mostly we will pick the amendment and do the question, because in your examination always whenever there is a amendments na, most probably you will get the 30 marks question from the amendment. So we will just pick the amendment and do the question, pick the amendment and do the question. Okay? I have selected certain amendment related question from your RTP or from intermediate RTP. So I just picked some question, very good question, some homemade question. So we will do that type of question. Okay, guys, you know that under section 54, say 54, 54 is, there is one section, 54 exemption and in capital gain. You know about 54? 54 exemption. If you remember from intermediate also, na? If you sold any house property and if you purchase one residential house property in India, then exemption is available. So under section 54, assessees individual and HUF. Say individual and HUF. Because residential house property is required only for individual and HUF. Company don't need house property or partnership firm don't need house property. They are not a natural person. So individual and HUF need the house property. So here assessee is the individual and HUF. Now guys, if individual HUF transfer any house property, any residential house property, and there is a long-term capital gain and they purchase any other residential house property in India, means new house property should be in India. Now old house property, they may be transferred in the Dubai or USA or wherever they want. But new house property, whatever house property they are purchasing, that house property should be in India. Then in this section, exemption is available. Now guys, the time limit to purchase new house property is a -1 + 2 + 3. Means under -1 + 2, there should be a purchase and +3, there will be a construction. Construction should be completed or started? Completed. In +3 year, construction should be completed. Now guys, under this section, your exemption is available. And how exemption is available? Suppose my long-term capital gain was 5 crore. I purchase another house property for the 6 crore. Then exemption will be of the 5 crore. But suppose if I purchase new house property for the 3 crore, then exemption will be a 3 crore. Means your LTCG amount or cost of new asset, whichever is lower. But guys, under this section, there is a one amendment from this year. And that amendment says that if you purchase new house property or construct new house property and that cost of new house property is more than 10 crore, then for the exemption purpose, you can take maximum 10 crore. Means if you purchase any house property and that new house property cost is more than 10 crore, then for the exemption purpose, you can consider only cost is the 10 crore. You got my point or not? Suppose for an example, in Mumbai, I sold my house property. There is a capital gain of the 20 crore. In Mumbai house property I sold, capital gain is 20 crore. Now I purchase one house property in the T Nagar in Chennai and I purchase for 15 crore rupees. How much exemption is possible? 10 crore or 15 crore? Right answer is 10 crore. So only exemption available is 10 crore. Now guys, under this particular section, you can purchase how many house property? 1 or 2? 1. Means purchase also 1. Sale 1, purchase 1. But there is a one amendment that was made in 2019. Okay, if your long-term capital gain is up to 2 crore, then you can purchase the 2 house property also. Huh? If your long-term capital gain is up to 2 crore, then you can purchase the 2 house property also. You got my point or not? Yes. Now guys, this similar 10 crore exemption amendment is made in the 54F also. Say 54F. Now section 54F section, 54F. This section is also applicable for individual and HUF. Say individual and HUF. Now, this section says that if you transfer any property, your wish, transfer any property. Any property means you can transfer the gold, you can transfer the silver, you can transfer the shares, you can transfer the plot, whatever property transfer. There is a long-term capital gain. And if you purchasing any one residential house property in India, you can claim the exemption under section 54F. But you know that under 54F, exemption is available on that pro rata proportionate basis. Okay, if your net consideration is fully utilized, then capital gain is fully exempt. But if your net consideration is partly utilized, then capital gain is exempted proportionately. And how proportion you make? Just take the long-term capital gain, multiply by cost of new asset, divide by net consideration. By capital, long-term capital gain, multiply by cost of new asset, divide by net consideration. Now guys, under this section also there is a one amendment. Can new house property, if you purchase for the more than 10 crore, then for the purpose of exemption, you will consider new house property cost is only 10 crore. Suppose I purchase in T Nagar a property for the 15 crore, then in formula, cost of new property, I will take only 10 crore. I will take only 10 crore. So if new house property, if you purchase for the more than 10 crore, then you will take only 10 crore as maximum. For the exemption purpose, cost of new property will be maximum 10 crore. Okay guys, one more point. In that section 54, if you purchase the house property, but suppose that house property is transfer within 3 years, then what will happen? Exemption will withdraw. In that section 54, what we have discussed, okay, if you purchase any house property and suppose that house property you have transferred within 3 years, then whatever exemption you have claimed earlier, that will be withdraw. And how it will be withdraw? You know that whenever you will calculate the capital gain on new house property, then whatever exemption you claim earlier, that will be reduced from your cost of acquisition. That will be reduced from your cost of acquisition. In that way, exemption will be withdrawn in 54. Means suppose I purchase the new house, old house property sold in like T Nagar, I purchased new house property. Suppose new house property transfer within 3 years. Then whenever capital gain will be calculated, then from new house property cost, I will reduce the amount claim, exemption claim earlier. So cost of acquisition of T Nagar property minus exemption claim earlier, that will be reduced, and remaining I will consider as cost of acquisition of T Nagar property. This is the 54. But in 54F, exemption withdrawal is little bit different. If you remember 54F, in 54F, what they say is that, okay, suppose, try to understand. I have sold the shares. I purchased one property and I claim the exemption. Suppose new property I sold within 3 years, then on new property calculate capital gain separately. Means there is no need to interfere anything. There is no need to reduce the cost and all. Means on new property, calculate capital gain as usual. As usual, capital gain calculation is there. There is no need to reduce the cost from new property. And guys, just calculate separately capital gain, and whatever exemption you have claimed earlier, just that will be treated as a long-term capital gain in the year in which new house property is transferred. So what I'm saying that in case of the 54F, that exemption withdrawal mechanism is totally different. Now 54F mechanism is like whenever you sold the new property within 3 years, calculate capital gain on new properties separately. No interference of exemption and all. There is no need to reduce from cost and all. Take the full cost as a like cost and calculate capital gain. And whatever exemption you have claimed earlier, that will be treated as the long-term capital gain in the year in which new house property is transferred. You got my point or not? On the same line, in the compact, I have given one example. That is the example. If you have your book, then just check this example. If you don't have the book, then just focus to the board and just do this example. In compact, I have given one example. Just do that. This is of 54F. on 30th March 26. Huh? But there is a short term na. So again 54 will not apply. Then also exemption will be withdrawn. Because law says the same thing. Law says that if you purchase one property, then within 2 years from the date of transfer. So if transfer date was 24, na? Transfer date of that property was 16/3/2024. Yeah, then after that you can purchase. No issue. Yes, people. Huh. Any doubt in this question? Any doubt in this question? Yeah. Deposit amount also. Like either obviously for exemption purpose that new property cost or deposit, you will take maximum 10 crore. Now how it is possible that you deposit 15 crore and purchase the property? Not possible. So for deposit also it will be a 10 crore. Okay. Now in your super 30 question, I have given you one question. In your super 30 question, just check the question number 5. Just check the question number 5. Okay guys, tell me one more point. You know about section 50C? 50C, 50C, 50 and capital C. Stamp duty value, you know, huh? Okay, whenever you transfer any immovable property and stamp duty value is more than 110% of consideration, then SDB will be treated as full value of consideration. If you are not satisfied with SDB, then your case may be transferred to the valuation officer. If valuation officer increase the value, then valuation officer value will be ignored. But valuation officer decrease the value, valuation officer value will be treated as full value of consideration. Now stamp duty value will be considered on date of registration or agreement. Date of registration or agreement. Normally it is a SDV as on date of registration. But if there is a date of agreement and registration is different, and if you received any consideration or part thereof up to the date of agreement by account pay check, account pay demand draft or any mode of electronic clearing system up to the date of agreement, then you can consider the SDV as on date of agreement. You understood? Just do this question. Done, people? Here you purchase the property for more than 10 crore. You will claim maximum exemption of 10 crore. Yes, people, done with that question? Say done. पुरनजुदा पुरनजुदा ही बोलते हैं यहाँ पे पुरनजुदा तो व्हाट यू विल से पुरनजुदी पुरनजुदे okay and in like Kerala we say manasalai manaslayo so you will say manaslayo right so manaslayo huh? I will say manaslayo so you will say manaslay oh I am learning all South Indian language. Okay, but still I fail to understand Marathi also. I am in Mumbai from last 10, 12 years, but I understand Marathi, but I cannot speak the Marathi. So that's the issue. So I is little bit I understand Tamil also. If any person is like you angry, then I can understand he is angry. But I don't know what he is telling. Okay, so guys. Next is a life insurance policy. Say life insurance policy. Life insurance policy. Life insurance policy. There are amendment on life insurance policy, and this time in examination, you may get the question from life insurance policy maturity. So guys, life insurance policy maturity is normally exempted. Say exempted. Life insurance policy maturity is normally exempted. You can take the life insurance policy from LIC, Life Insurance Corporation, or any other private player also. Private player means like ICICI Prudential, HDFC Life, Tata AIA, IAIA, or HBI, SBI Life also. So any other player also, life insurance policy maturity is exempted. Say exempted, exempted. But guys, there are 4 exceptional cases where life insurance policy maturity is going to be taxable. There are 4 exceptional cases where life insurance policy maturity is going to be taxable. First is in case of the keyman insurance policy. Guys, in case of keyman insurance policy, your maturity amount is always taxable. Either it is taxable in case of in hands of under the head PGBP or salary or other sources, that depends. Keyman insurance policy is basically a key person of any business, and if any policy is taken in the name of that key person, if there is any maturity, including any bonus amount received on keyman insurance policy, it's always taxable. If it is received by the employer, then it is taxable under PGBP. If it is received by employee, then it is taxable under the head salary. And if there is no employee-employee relationship, and if it is received, then it is taxable under income from other sources. Suppose Reliance took one Keyman insurance policy in the name of the Mukesh Ambani. Now suppose under Keyman insurance policy, if Reliance received any amount, then it is taxable under the head PGBP. If Mukesh Ambani received any amount, and if Mukesh Ambani is an employee of the Reliance, then it is taxable under the head salary. And suppose Mukesh Ambani is not an employee and he received anything, then it is taxable under income from other sources. You got my point or not? Yeah. So always remember, Keyman insurance policy maturity is taxable, including bonuses received, that is taxable. Now second is, guys, in case of any other insurance policy, if you pay the premium and at the time of paying the premium, if limit is crossed, and that limit is given under section 80C of the deduction topic. If you remember, then you know that on the premium there is some limit. Okay, if any policy is taken on or before 1st April 2012, then your premium can be up to 20% of the policy value. If policy is taken on or after 1st April 2012, then that premium limit is at 10%. And if policy is taken on or after 1st April 2013 in the name of the handicap, then that limit is a 15%. So suppose if that limit is crossed, then maturity is taxable. That limit is crossed, then maturity is taxable. Limit is crossed, then maturity is taxable. But guys, remember, if that limit is crossed, but maturity amount is received at the time of death of person, then it is not taxable. Then it is not taxable. Normally, if that limit is crossed and maturity amount is received, then it is taxable. But if it is received at the time of death, then it is not taxable. If it is received on the death, then it is exempt. Okay, one more point. Next part is related to ULIP. Say ULIP. ULIP full form is Unit Linked Insurance Policy. So basically, what is the ULIP? ULIP is basically like, suppose for an example, ULIP is like a mutual fund only. Now, if you are not directly investing in mutual fund, you just giving your money to the insurance company. Insurance company will give you two component. One is your life insurance, and along with this, there will be a investment also. And investment will be like a mutual fund only. That is called your ULIP. Say ULIP. So ULIP is a life insurance policy only. ULIP maturity is also exempt. But guys, in case of the ULIP, is any ULIP is taken on or after 1st Feb 2021. What is the date? 1st Feb 2021. And in any year, if premium is more than 2,50,000, then maturity is taxable. If any ULIP is taken on or after 1st Feb 2021, and in any year, if premium is more than 2,50,000 in any year, then maturity is going to be taxable. One more point. Suppose guys, if you have taken the multiple ULIP, if multiple ULIP is taken on or after 1st Feb 2021, and guys, individual policy premium is not more than 2,50,000, but aggregating it is more than 2,50,000, then whatever policy premium in aggregate is up to 2,50,000, on those policies you can claim the exemption, but other policy will be taxable. I can take example. Suppose for an example, today I took one ULIP only and premium is 3 lakh in a year. It is taxable or exempt? 3 lakh in a year, taxable or exempt? Maturity will be taxable. Suppose today I took 5 ULIP and premium is 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh. So total there is a 5 lakh, but ULIP, individual ULIP is premium is less than 2,50,000, but in aggregate it is more than 2,50,000. So 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh. Then I can claim the exemption on the 2 ULIP, because 1 lakh and 1 lakh total 2 lakh. So on this 2 lakh, 2 ULIP, I can claim the exemption, but remaining 3 ULIP is going to be taxable. Remaining 3 ULIP is going to be taxable. But remember, now question is that, sir, where ULIP maturity will be taxable? Normal life insurance policy maturity is taxable under other sources, but ULIP maturity will always be taxable under the head capital gain. And capital gain will be always long-term capital gain under section 112A. Remember, always ULIP maturity is going to be taxable under capital gain because it is treated as capital asset. It is like a mutual fund, and guys, that it is going to be taxable under section 112A at the rate 10% in excess of the 1 lakh. So suppose I got the ULIP maturity after 10 years, and suppose maturity amount is a 1 crore. So whatever premium paid in those years, like premium paid, premium will be reduced. That will be treated as cost of acquisition. There is no benefit of indexation. Remaining will be treated as long-term capital gain under section 112A. You understood my point or not? Yes or no? Now guys, there is a one amendment, and on this amendment ICI may ask you one question in current exam. Try to understand. Lawmaker says that suppose if you are taking any life insurance policy and that life insurance policy is not a ULIP. Life insurance policy is a normal life insurance policy. And life insurance policy is taken on or after 1st April 2023, means current year. 1st April 2023, if you are taking any life insurance policy, and guys, in any year, if premium is more than 5 lakh, then maturity is taxable. If premium is more than 5 lakh, then maturity is taxable. Premium is more than 5 lakh, then maturity is taxable. So this amendment is made from this year. Okay, if you take any life insurance policy other than ULIP issued on or after 1st April 2023, and if premium payable for any previous year during the policy is more than 5 lakh, then guys, maturity is going to be taxable. But now suppose there are multiple policy, then what will happen? Today, suppose today I took the from on or after 1st April 2023, I took the 5 policy and premium is suppose 2 lakh, 2 lakh, 2 lakh, 2 lakh, 2 lakh, 2 lakh. 5 policy premium is 2 lakh, 2 lakh. So aggregating it is 10 lakh. It is more than 5 lakh. So guys, out of this 5 policy, on the 2 policy, I can claim the exemption. Means first policy 2 lakh, second policy 2 lakh, total is a 5 lakh. Sorry, total is 4 lakh. So on 2 policy, I can claim the exemption, but remaining 3 policy maturity will be taxable. Remaining 3 policy maturity is going to be taxable. Now guys, this life insurance policy maturity will be taxable under income from other sources. Under income from other sources. One more point. Guys, here they mention that if life insurance policy premium in any year is more than 5 lakh, then maturity is going to be taxable. Premium including GST or excluding GST? Suppose my premium is 4,70,000. GST is added 5%. Suppose it comes to the 5,10,000. So including GST, it cross 5 lakh, but excluding GST, it does not cross 5 lakh. What do you feel? Premium including GST or excluding GST? Huh? Excluding or including? Right answer is, CBTT clarify. This says that premium excluding GST, not including GST. It's excluding GST. So here premium was only 4,80,000 suppose, and including GST it's cross 5 lakh. It will be treated as up to 5 lakh only, means it is within the 5 lakh, not including GST. GST has to be ignored. GST has to be ignored, and you have to check the pure premium amount. Okay, what is your premium amount? Because GST goes to the Modi Sarkar or your state government and all. So it is not part of your premium. Just you have to ignore the premium. So it's excluding GST. Okay. One more point, guys. Lawmaker says that okay, here if your premium is more than 5 lakh, then maturity is going to be taxable. It will be taxable under income from other sources. But question is that total maturity amount will be taxable or only income component is going to be taxable? Total maturity or income component? Right answer is income component. Income component means, suppose for an example, I have taken one policy. Every year I am paying the 10 lakh premium for the 10 year. So I paid the 1 crore. After 10 years, suppose I receive the 1 crore 60 lakh. So 1 crore 60 lakh minus 1 crore, that remaining amount is going to be taxable. So whatever maturity amount minus premium paid and remaining amount, it is going to be taxable under income from other sources. Now one more point, guys, here. Okay, sir, remaining amount is taxable under income from other sources. But when we pay the premium na, that time we claim the deduction also under section 80C. So whatever amount of deduction we have claimed, is that will be reduced or not? Means I can take an example, try to understand. Every year I am paying premium, suppose 10 lakh. But out of 10 lakh, every year I am claiming 1,50,000 as a ATC. ATC every year I am claiming 1,50,000. Now at the time of maturity, when I am receiving the amount, so whatever maturity amount minus premium paid, so premium I will consider total 10 lakh or only 8,50,000. Right answer is here law clarify only 8,50,000. Means whatever deduction you have claimed na, that will not be part of your premium. Whatever deduction you have claimed, that will not be part of your premium. So here guys, I have given one example also, and you can check this example, directly check here on the board only. Guys, there is a one person, Mr. Ram. That second example, Mr. Ram. Now Ram's sum assured is a 60 lakh. Every year he is paying premium 5,20,000. Terms of policy is 10 year. Deduction claim under section 80C is 1,50,000 and maturity amount is 77 lakh. Now guys, he is paying annual premium 520, but out of that 1,50,000 is 80C deduction. So can I say that what is his for the 5,20,000 premium he is paying, but 1,50,000 is deduction. So what premium amount you will consider here? 3,70,000. Multiply by 10, so 37 lakh. So your maturity amount is 77 lakh minus 37 lakh. So only 40 lakh is going to be taxable under income from other sources. Only 40 lakh is going to be taxable under income from other sources. Means when you reduce the premium na, then premium excluding premium from premium you have to reduce if any deduction is claimed under chapter 6A. So if any deduction is already claimed under chapter 6A na, that will not be considered in the premium here for calculating the net income component. So here 5,20,000 is your annual premium paid. Deduction claim under section 80C is 1,50,000. Remaining is 3,70,000 multiplied by 10. So that comes to the 37 lakh. 77 lakh minus 37 lakh. Remaining 40 lakh is going to be taxable. Directly check one question from your book. You receive the notes. Just check one question. And that question number is question number 6. Just check one question. Question number 6. Page number 22. Question number 6, page number 22. Question number 6. Try to understand. Question number 6. Mr. Akash, age 47 years, is a CEO of the BEC Enterprise Private Limited. So he is working with BEC Private Enterprise Private Limited. During the previous year 23-24, he has earned the following income. So his income is given. Salary is 45 lakh. Long-term capital gain on the sale of listed equity share STT paid is 6,54,000. Dividend income is of 12 lakh from the shares of Indian company. Interest on saving bank account with the SBI is 16,000. Interest on fixed deposit with the Bank of Baroda is 45,000. So guys, this is all about his income. Salary income is 45 lakh. LTCG 112A is 6,54,000. Dividend income is 12 lakh. Interest on saving bank account with SBI is 16,000 and FD interest is 45,000. This person is not a senior citizen. His age is only 47 years. Now next part. Mr. Akash has made the following payments towards the medical insurance premium for the health policies taken for his family member. So guys, he has took some health insurance policies for his family member. Guys, whenever you take the health insurance policy, Mediclaim, then deduction is available under which section? 80D or 80DD? 80D only. Now guys, if you remember the 80D says that in case of the individual HUF, deduction is available in 80D. Now what is the limit? Limit is for individual, for assessee, his spouse and dependent children, limit is 25,000. Huh? Assessee, spouse and dependent children, limit is 25,000. 25,000 for the health insurance or like a central government health scheme or preventive health checkup or medical treatment and all, limit is 25,000. But suppose if any person means assessee, his spouse or children, if any person is senior citizen, then that limit will be raised to the 50,000. हाँ भाई. So 25,000 or 50,000. 25,000 normal case. If any person is senior citizen, then 50,000. Now guys, can I say that for the parents there is a separate limit? For the parents there is a separate limit, and for parents there is a limit of 25,000 additional limit. But suppose any one of the parent is senior citizen, then that limit will be 50,000. For the parents also limit it is 50,000. Now one more point. You know that preventive health checkup for the assessee himself, dependent children and parents, maximum expenditure can be 5,000. But this is additional 5,000 or included in overall limit? Additional or included in overall? Included. It is already included in overall limit of the like 25,000 or 50,000. Maximum it can be 5,000. Now preventive health checkup 5,000 is for parents and assessee. There is different 5,000 or overall 5,000. Preventive health checkup for an example, for me, my wife and my children and my parents. So total preventive health checkup, it will be 10,000 or only 5,000? Only 5,000 for parent, me, my wife, everything including 5,000 only, or 10,000? Right answer is 5,000. So 5,000 is for the himself, spouse, dependent children and parent. And it is included in your limit, and maximum preventive health checkup can be 5,000. And guys, under section 80D, any expenditure you can incur for the health insurance and all, it should be any mode other than cash. But for the preventive health checkup, it can be in the cash. For the preventive health checkup, it can be in the cash. Okay guys, one more point. Under this section, there is a one point. Suppose for any senior citizen means resident individual age 60 years or more. Senior citizen. Suppose in his name, there is no no health insurance. Means no medical, there is no medical insurance policy, then for that purpose you can spend for the medical treatment also, and you can claim the deduction for medical treatment. But medical treatment you can spend 50,000, because like for senior citizen limit will be 50,000. But for medical treatment, that 50,000 limit is separately or it is included in 50,000? Right answer is included in 50,000. So for an example, for my mother and my father, suppose both are senior citizens, so overall limit for the parents is 50,000. So I can spend for the medical treatment or health insurance, that I have choice. For mother, suppose I have took the health insurance, then medical treatment expenses is not allowed for mother. But for father, suppose I am spending for the medical treatment, for father medical treatment expenditure is allowed, but overall limit will be 50,000. You understood or not? Yes or no? Yes. So just check here. Here this point says that medical premium for his spouse age 43 years 13,500 by the check. So here guys, he paid the medical premium for his spouse age 43 years 13,500. So it is allowed under section 80D. So total 13,500 is allowed, no issue at all, because it is within the limit of the 25,000. Now next part, medical premium for his mother age 65 years 26,670, and it is by check. So can I say that for mother is a senior citizen? So guys, total 26,670 is allowed. So 26,670 is allowed because limit is a 50,000. Now next part. Preventive health checkup for 5,500 each for his wife and mother in cash. Now totally he spent the 11,000 for the preventive health checkup, 5,500 for his wife and 5,500 for his mother. Can I say that here maximum 5,000 is allowed? So in wife, you can add the 13,500 plus the 5,000, because wife limit is a 25,000. So here 13,500 plus 5,000 will be allowed for the wife. Now for mother, it is not allowed preventive health checkup because already claim in the wife. Now next part. Akash also incurred medical expenses by credit card of 17,000 for the treatment of his mother. Now guys, question is that on mother name, there is a health insurance policy or not? Yes or no? So in mother name, there is a health insurance policy. Then for the mother, he incurred for the treatment also. This is not allowed. Because when on any senior citizen, if there is a health insurance policy, then medical treatment expenses is not allowed. Medical treatment expenses is allowed only when there is no health insurance policy. So here guys, there is a health insurance policy, so medical treatment is not allowed. But for father, he has spent 27,000. Now guys, in name of the father, there is no health insurance policy. So health insurance policy is not there. So here guys, you can claim the 27,000. But guys, this 27,000 and for the mother 26,670 total comes to 53,000. Can I say that for parents maximum deduction is allowed is 50,000, and guys for wife maximum deduction here is 13,500 plus 5,000 total comes to the 18,500. So can I say that under section 80D your deduction is allowed is 23,500? Sorry, 68,500. You understood or not? Yes or no? Now next part, all people pay attention. Now this is the amendment part related to the life insurance policies. Pay attention. Now guys, he has multiple life insurance policies. The detail of such policies are as given hereunder. Multiple life insurance policies. Now guys, he is having one policy X, but X is taken on 1/4/2017. And annual premium excluding GST is 40,000. GST is 7,200. Just ignore the GST because we should not check the GST wala part. Ignore that GST part. We have to check the pure premium excluding GST. Okay. Now, his premium is 40,000. He took this policy on the 1st April 2017. Date of maturity will be in 2026. Consideration he will receive 7 lakh and his sum assured is a 5 lakh. Now guys, 5 lakh is a sum assured and every year he is paying premium 40,000. This is within the limit of that 10% or not? Yes or no? Guys, you know that normally life insurance policy maturity is exempted when it is taxable in 4 cases. One is the Keyman insurance policy. Second is ULIP, that 2,50,000 limit is cross, or one is that 10%, 15%, 20% limit is cross, and last is a premium is more than 5 lakh and policy is taken on or after 1/4/2023. You got my point or not? So here guys, can I say that here premium is 40,000, your sum assured was 5 lakh. So 5 lakh, it is 40,000 is within the 10% limit. And this policy is taken before 1/4/2023. Even if it is taken on or after 1/4/2023, then also it is exempted because premium is not more than 5 lakh. So can I say that this life insurance policy maturity is going to be exempted? Are bolo yes. Exempted. So maturity will be exempted under section 1010D. Now next part. Next guys, there is a one policy Y, one policy Z, one policy A, and this all policy is taken on or after 1/4/2023. And policy B, but policy B is a term insurance policy. Hey guys, what is the meaning of term insurance? You know, many times, like many people say, take the term insurance, term insurance. What is the meaning of term insurance? Term insurance. You are CA final student, you will be CA in next 4 months. And you don't know about term insurance. You know that this time result will be very good. You heard about that? Yes or no? You know the president told that in the next 20 years, India need 40 lakh chartered accountant. And nowadays, this time, they are only 1 lakh student is giving exam. So average should be the 2 lakh every year. He has mentioned that India need 40 lakh chartered accountant in next 20 years. So every year there should be a 2 lakh. And this time exam 90,000 student only appearing for exam. So there may be possibility of 100% result. Huh? So just you have to do, like you have to hard work. This time result will be very good. And you know that government told ICI to pass more and more student. Because you are laughing. This is the true news, true. Like government one day, Nirmala Sitaraman, Narendra Modi called like ICI president and all. And they ask, okay, why you are not passing the student? India need the CA because our economy will grow. And many people don't know how to file return, TDS return and all. So CA will help in that. So they asked to pass more and more students. That's why our institute came up with the foundation and intermediate 3 times. Why 3 times? Not only to collect extra fees. They have some other objective also. They have other objective. They want more and more CA in India. And now, till now only there are 4 lakh CA. And we need in 20 years 40 lakh CA. So 10 times CA we need in next 20 years. So this time ICI will give you good result. In the CA final, there will be a good result. But just you have to prepare well. And this time they are giving 1 month extra also due to election. There may be, I don't know. Okay? Otherwise, tomorrow if anything is announced and only 2 days date is postponed or 3 date is postponed. I feel total exam will be postponed as per my understanding. But there may be anything, I don't know. Okay, what do you mean by term policy, term insurance? Very good. Term insurance. Okay. Now guys, you know that you completed your college, TY. He has given one explanation of term insurance. Term insurance means he is saying that there is a fixed term. 5 year, because he mentioned, he heard na term means period. So in TY BCom and in our BCom exam, we don't know about anything, but just we write, okay, we understand word. Okay, suppose they mention the reverse mortgage. So we will write first reverse. Reverse means suppose any car is going forward. Then how to just go back again that car, that is called reverse. And mortgage is mortgage. So on that same logic, he used term insurance. Insurance policy for fixed term, that is called term. Term insurance basically guys, in term insurance, if you died, then only insurance company will pay you something. If you not died, then your premium is lapsed. Means obviously you will not get anything in return. That is called term insurance. So always remember term insurance, when you are not going to anything in return, there is no maturity will be only at the time of death. And if you died, then your family member will enjoy the money. They will get the money and that is totally exempted. In the life insurance policy, guys, in all the condition, even that condition 10%, 20%, 15% is that is not followed. Or premium is more than 2,50,000 in case of ULIP or 5 lakh in case of other policy. But if there is any amount received at the time of death, that is totally exempted. So in term insurance, when there will not be any maturity, so nothing is going to be taxable. So whatever provision we are discussing now, that is not applicable. Because when you will not receive anything, when you are not going to receive anything in case of term insurance, so whatever we are discussing now, that is not applicable in case of the term insurance. So in case of term insurance, it is not applicable because nothing, you are not going to receive anything. So when you are not going to receive anything, so whatever provision we are discussing here, that is not applicable in case of term insurance. Okay. Now, there are 3 remaining policies. One is the Y, one is the Z, and one is the A. Now, all policies taken on or after 1/4/2023. And guys, all policies maturity will be in the first policy maturity 31st March 2032. Second policy 34, third policy 33. Consideration you will receive, that is 36 lakh, 28 lakh and 30 lakh. And sum assured is a 33, 25 and 27. But in sum assured, if you check the premium, that premium is within the limit of the 10%. Everywhere premium is within the limit of the 10%. But guys, your total premium is here 3 lakh, 2 lakh and 2,50,000. Can I say that individual policy premium is not more than 5 lakh? but aggregate it is more than 5 lakh, then you can claim the exemption on the policies where premium is up to 5 lakh, means not more than 5 lakh. So can I say that either I can claim the exemption on the Y and Z, because Y and Z premium is 5 lakh. So I can claim the exemption for the Y and Z, but guys, A policy maturity will be taxable then. A policy maturity is going to be taxable. A policy maturity is going to be taxable. Or alternatively, I can claim exemption for the Z and A, because total is 2,50,000. Then Y policy maturity will be taxable. Now we will check that which is more beneficial. Now guys, just check here. First, if Y, suppose Y is taxable, then what will be your taxable amount? Can I say that 3 lakh is premium you are paying every year, and your maturity will be on 31st March 32 and policy taken on 23. Then you have paid the premium for how many years? Just count from 23. 9 year. So 9 year means, can I say that 3 lakh multiplied by 9 years comes to 27. So 36 lakh minus 27 comes to 9 lakh. So policy Y maturity amount taxable is 9 lakh. If you tax policy Y, now policy Z, calculate 2 lakh multiply by 9 only. So 18. Guys, here also that GST is not considered. Dhyan rakhna. Bhai, for exam purpose, you should remember that GST should not be considered here. So remaining is 10 lakh. And guys, last 250 multiply by 9. 22. 2250. Huh? So 2250. So remaining amount is 7 lakh 50. So guys, now I have an option. Either I can exempt Y and Z. If I exempt Y and Z, then taxable income will be 750. And second option is I can exempt Z and A. Because if I exempt Z and A, then taxable income will be 9 lakh. So which is more beneficial? Y and Z. So I will claim the exemption for Y and Z. And guys, A will be the taxable. A maturity will be the taxable. I have an option. I can play this option or I can exercise this option. Y and Z will be exempted and A will be taxable. Let's see what ICI is asking. First is, on the basis of fact given above, choose the most appropriate answer. First point, first MCQ. Which are the life insurance policy in respect of which Mr. Akash would be eligible for exemption under section 1010D in respect of maturity proceed? So choose the most beneficial to the Akash. So guys, obviously your X maturity is exempted. Y is exempted and Z is exempted. So for you, which one is beneficial? X, Y and Z. So here X, Y and Z, because here it's 5 lakh. Yeah, it is exempted. It will be taxable. If you take this, then so which is the right answer? X, Y and Z. So A will be your right answer here. Now second, what would be your answer of MCQ 1 if Mr. Akash surrender LIC A in assessment year 26-27 and claim exemption under section 1010D in respect of such LIC? This information is only for the purpose of this MCQ. For an example, guys, assume here Akash surrender the LIC A. So when LIC A is surrender in 2026-27 assessment year and he claim exemption for the A, Then guys, when he claim the exemption for the A, then he can claim now exemption for the Z only. And can I say that Y will be taxable? Yes or no? When he claim the exemption for the A under section 1010D, then he can claim now exemption for the Z only. Because if you club Y, then the premium will be more than 5 lakh. Nah. So here guys, he can claim the exemption for the A, Z and X. So which is the right answer? C is the right answer. C is the right answer. So X, Z and A. Now next part. What would be the amount of deduction available to Akash under chapter 6A for the assessment year 24-25 if he has exercised the option to shift out from the default tax regime? Hey guys, you know that from this year 115 BSE is a default. Means if you don't say anything, then 115 BSE. But if you opt out from 115 BSE, means normal provision. So he is saying that he want to follow the normal provision. And when he wants to follow the normal provision, then just tell him how much deduction he can claim under chapter 6A. Guys, can you tell me how much deduction? So can I say that 80D is 68,500? Yes or no? Guys, you know that he is having the saving bank interest of 16,000. So on that 16,000, he will claim the 80 TTA of 10,000. And guys, he is paying the life insurance policy premium also. Here he is paying premium 40,000. Here he is supposed for taxable policy. Here he is paying 3 lakh. So guys, he is paying the life insurance policy premium also. So here he is paying 40,000. Here he is paying 3 lakh. Here he is paying 2 lakh. So can I say that he can claim the deduction under section 80C also? So 1,50,000 deduction he can claim under section 80C. So 80C is 1,50,000. So just tell me, 2,28,500 is your deduction amount. So total deduction 2,28,500. Which answer is correct? C. C is the correct answer. Most probably C. If you don't know anything, just put the C. Okay. Now next part. Next MCQ. What is the Akash tax liability under the default taxation regime under section 115 BSE? Guys, if you follow 115 BSE, then what will be the Akash tax liability? So guys, can I say, let's calculate his income. So if we calculate his income, then can I say that salary income is 45 lakh? But from salary income, there is a standard deduction 50,000. Now question is that, is that standard deduction available even he claim 115 BSE or not? Yes or no? If he claim 115 BSE, slab rate is 3 lakh, 6 lakh, 9 lakh, 12 lakh, 15 lakh. Even then also that 50,000 standard deduction available or not? Answer is yes. There is an amendment from this year. Till last year, it was not allowed. But now there is an amendment that 50,000 standard deduction is available. Even he claimed the 115 BSE benefit. So even he claimed the 115 BSE benefit. So can I say that here in his case, his salary income will be 44,50,000? So 44,50,000 is his salary income. Now always remember, if only salary is given, then you have to assume that 50,000 standard deduction is not claimed till now. Or suppose they mention that he received the salary of 80,000 per month and all, then also your assumption will be that 50,000 standard deduction is not claimed. But if examiner gives you that salary and in bracket he mentioned that word computed, if computed is given, it means that 50,000 standard deduction is already claimed. Okay, so here 44,50,000 is your salary income. Now long-term capital gain on the sale of listed equity share STT paid amounting to 654. So can I say that guys, this 6,54,000 is going to be taxable at the rate 10%, but in excess of 1 lakh under section 112A. Now next part, his dividend income is 12 lakh. So dividend income is 12 lakh. Dividend income is 12 lakh. Now interest on saving bank account. Interest on saving bank is a 16,000 and FD. Guys, interest on fixed deposit with BOB is 45,000. So 45,000 and 16,000 total comes to 61,000. Okay, now there is a one more catch. Always remember, if examiner give you language like this, interest on fixed deposit with BOB is 45,000. Always assume, they mention that interest on fixed deposit with BOB 45,000 means this is the gross interest. Gross interest. If they mention only interest on fixed deposit with BOB is 45,000, it means it is a gross interest. But suppose examiner mention that interest received word is given, or interest credited in bank account. Interest received word is given or interest credited in bank account. If this word is given, then assume this interest is net of TDS. Whenever interest received word is given or interest credited in your bank account, this word is given, assume this interest is a net of TDS interest. But here guys, they mention about only interest. So we will assume it is a gross interest of 45,000. But suppose in your question they use the word interest received or interest credited in bank account, then you have to assume that this 45,000 is for 90% and you have to calculate for 100% 50,000. But guys, there is no need to do this gross up in current question, because in current question they mention only that interest on fixed deposit of Bank of Baroda or interest income is 45,000. So it is a gross of TDS only. So total I have considered only 61,000. 61,000 means 16,000 plus 45,000. So total comes to, total comes to, 44 lakh 50,000, 654, 12 lakh multiply by plus 61. Plus add na calculator. 64 lakh, 63 lakh, 65,000. 115 BSc deduction is not available. Okay. Now guys, on 6365, calculate tax as per slab rate of 3 lakh. But guys, there is a special rate also. A special rate is 6 lakh 54,000. So for 6 lakh 54,000 minus 1 lakh multiply by 10%. So here it will be taxed as 55,400. And guys, on the remaining income, so 6365 minus 654, remaining is 57 lakh 11,000. On this, just calculate tax as per slab rate, and your slab rate is that 3 lakh slab rate. 3 lakh to 6 lakh, 6 lakh to 9 lakh, 9 lakh to 12 lakh, 12 lakh to 15 lakh, and slab rate is 5%, 10%, 15%, 20%, and 30%. Just calculate tax and give me the tax amount. Calculate tax. 14 lakh. Calculate again. 57 lakh 11. Or it's very simple. 5711 minus 15 lakh multiply by 30% plus 1 lakh 50,000. Because up to 15 lakh as per new slab, tax amount is 1 lakh 50,000. How 1 lakh 50,000? 3 lakh to 6 lakh 15,000. After that 30,000. After that 45,000. And after that 60,000. Total 1 lakh 50. Brother, 3 to 6 is 15. 6 to 9 30,000. 6 to 9 na. After that 9 to 12 45, and 12 to 15 60. Total it 150. So you can remember that as per new slab rate, up to 15 lakh income tax is 1 lakh 50,000. So now calculate. 14 lakh, 14 lakh, 13,000. Total 14 lakh 68. Now surcharge is applicable. Okay, so now surcharge is applicable or not? Yes, surcharge is applicable. Income is more than 50 lakh. So surcharge is applicable at the rate 10%. Just add the 10% and just add the 4%. What is your total tax? 16 lakh 80,000 193. Or can I say that 16 lakh 80,000 190? So that will be your net tax payable as per the 115 BAC. 16 lakh 80,000 190. So your point number 4, question number 4, B is the right answer. Now last part. What is the Akash tax liability for assessment at 24-25 if he has exercised the option of shift out of the default tax regime? Hey guys, if he's shifting out, then his income will be 6365 was his income. Huh? Minus deduction under chapter 6A. Under chapter 6A deduction, we calculated na, that was 228,500. So 228,500. So remaining amount comes to 6130, 6136,500. Just calculate tax. So first on the LTCG tax will be 55,400, 55,400, and remaining income will be 6136,500 minus your 654. So remaining is 6136,500 minus your 654 LTCG. So remaining is 5482. On this, calculate tax as per normal slab rate of 2,50,000 plus 2,50,000. There is no tax. 252, 5 lakh, 5 lakh to 10 lakh, more than 10 lakh. So just calculate tax as per that slab. 14 lakh, 57, 250. Just add the health and education, surcharge of 10%. Just add the health and education says 4%. So total comes to 1,730,470. So A is your right answer. A is your right answer. In this question, A is your right answer. All Hyderabad student, how are you? So many student is from Hyderabad, Bangalore, Coimbatore also. Wow. Okay. Done, people? Say done. Any doubt? Yeah, it is for dividend also, but it should be from domestic company. Yeah. If any foreign company dividend is received, then you don't know about law of foreign country. So you will assume it is a gross only, okay? Because in the last examination, there was one question. They mentioned dividend received from foreign company. So people gross up that also by 10%. No. Dividend from domestic company, then only you have to gross up because TDS is applicable on domestic company under section 194. That same logic is applied for dividend also, okay? Okay, guys. You received the insurance multiple times. So please. He mentioned that in the insurance, suppose maturity is at different time. Then what will happen? I have given one example. This example is given in the book if you are having the compact. Then this is one example related to ULIP. Suppose first time you received the 37 lakh. Till that time you have paid the premium of 18 lakh. So remaining is taxable. Now second time maturity amount is 28 lakh. So after first amount you received, how much premium you have paid? That will be reduced here. Remaining is taxable that time. Same logic here also. Done? Are you guys done? Hey guys, just tell me now one thing. Guys, suppose if I made FD with any bank, then interest is received. That interest is taxable at under which head? FD interest taxable under IFRS. Suppose I purchased debenture and debenture interest I received or any bond interest I received, then that debenture bond interest is going to be taxable under IFRS only. Guys, just tell me what is the tax rate of IFRS? Slab rate. Or I can say that suppose my income is more than 10 lakh, 15 lakh, then I am going to be taxable at the rate 30%. Means my 30% tax rate is applicable. So if I invest in any debt instrument, in simple word I can say that, if I invest in any debt instrument, then my interest income is going to be taxable at the rate 30%. 30% is tax rate. Now how I can manipulate this thing? How I can save the tax? Guys, I will not purchase any debenture or I will not make any bank FD. I will purchase the debt mutual fund. Now, when I purchase the debt mutual fund, I will give money to the mutual fund company. Mutual fund company will invest in the debt security. Mutual fund company will invest in any debt security. They will make the FD, or they will like purchase any debenture, bonds and all. And guys, in my hand, nothing is taxable till the time I sell that mutual fund unit. And if I sell the mutual fund unit, then capital gain will be applicable. Because mutual fund unit is going to be mutual fund unit. If I sell mutual fund unit is basically a capital asset. If at the time of redemption or sale, there will be a capital gain. And suppose if I hold the debt mutual fund for the more than 3 years, then there will be a long-term capital gain. And long-term capital gain will be taxable at the rate 20%. And indexation benefit is also available. For mutual fund unit, indexation benefit is also available. If there is a 112A, then obviously the index benefit is not available. 112A is taxable at the rate 10%, but 112A is applicable in case of equity oriented mutual fund unit. Because 112A says that if there is a long-term capital gain on equity share or equity oriented mutual fund or units of business trust, that is taxable at the rate 10% under section 112A. But all other mutual fund unit, period of holding will be the 3-year debt mutual fund and all, and after 3 years if you transfer, then there will be a long-term capital gain. Long-term capital gain taxable only at the rate 20%, and there is an indexation benefit also. Because indexation is available, answer is yes. Indexation is not apply only in case of two security. One is the bonds and debenture. Bonds and debenture indexation is not available. But guys, in bonds and debenture also there are two exceptions. One is the capital index bonds and one is the sovereign gold bond issued by RBI. But other than bonds and debenture, in case of mutual fund unit, indexation benefit is also available. So what people started one planning. Okay, if you directly invest in any debt security, then you receive the interest, and that interest taxable under income from other sources. Your tax rate is 30%. And tax rate is 30%. Surcharge is also applied. High surcharge, like 37% surcharge may apply, 25% surcharge may apply. So what people started doing, you know that they directly invest through the mutual fund only. Just purchase the mutual fund company unit. Mutual fund company will invest in the debt market. And after 3-4 years, suppose if you sell, your tax rate is also only 20%. Your tax rate is 20%. Index benefit is also available. So people were doing that type of practice. So Nirmala Sitharamanji, your Nirmala Sitharamanji made one amendment this year. And Nirmala Sitharamanji introduced one new section that is 50AA. And on this section, you will get one MCQ in this examination. Guys, this section says that, try to understand. Now this section says that, okay, suppose if you sell, please pay attention. Now don't look into your book. Just focus here only, na. We'll check it. Okay, pay attention. Okay, just pay attention. Guys, this section 50AA, this section says that, can now if you purchase any debt mutual fund, say debt mutual fund. If you purchase any debt mutual fund on or after 1st April 2023, because this amendment is applicable from this year. So if you purchase any debt mutual fund on or after 1st April 2023, and at the time of maturity means mutual fund mature, or if you redemption, or if you sell mutual fund unit, then guys, there will be always a short-term capital gain and index benefit is not available. So always a short-term capital gain. Suppose, sir, debt mutual fund I purchased today, I am selling after 10 years. Then also there will be a short-term. Answer is yes, because government want to charge the 30% tax rate to get it parity between IFOS income and mutual fund, debt mutual fund income. Because in other sources, your income is taxable at 30%, and here it is a long term, then it should be taxable at 20%. So that's why they are saying that it will always be a short term. It will always be a short term. Even if you are transferring after 10 year, 12 year, 15 year, it will be always a short term capital gain. So remember, if you purchase the debt mutual fund on or after 1st April 2023, there is a maturity or redemption or transfer, anything, then there will be always a short-term capital gain. How you will calculate the capital gain? Full value of consideration, your redemption amount minus cost of acquisition. Index is not applicable and there will always be a short-term capital gain. So on short-term capital gain, normally we pay the tax at the rate slab rate only. Guys, short-term capital gain 111A is a different, na? That is for equity share, equity oriented mutual fund. We are talking about that mutual fund. So it will be taxable at the rate 30%. So now there is a parity between IFOS and this mutual fund, debt mutual fund. So if you directly invest in the debt instrument or you invest through the mutual fund company, now tax treatment is the same. Now guys, here they included one more type of security, that is the MLD. MLD means market linked debenture. Market linked debenture. Now what is the market linked debenture basically? Market linked debenture, like this Anand Rathi and Motilal Oswal group and all, they are used to issue the market linked debenture. So market linked debenture are basically a debenture. In that debenture, there will be a one fixed percentage of the interest. Means you will get the some amount is fixed, some amount is a debt instrument. But in that debenture, there is a one clause that some amount, your like some extra amount you will get if market is performing well. Means some other income, some other amount, you can say that depends on other indexes and all. That is called market linked debenture. And guys, Nirmala Sitharaman ji this time introduced this section, and Nirmala Sitharaman ji says that if there is a market linked debenture and market linked debenture, if you get anything, it always be a short-term capital gain. So for market linked debenture, if you get anything on the redemption or maturity or sale, there will always be a short-term capital gain on market linked debenture also. But guys, there is a one catch here. For debt mutual fund, this section is applicable only if the debt mutual fund purchase on or after 1st April 2023. But for market linked debenture, they have not mentioned about the date. So even market linked debenture you have purchased in 2016. But if there is a redemption on or after 1st April 2023, this section is applied. So if you read in compact also very carefully, I clearly mentioned this. In case of unit of specified mutual fund, now just understand as a debt mutual fund. In case of unit of specified mutual fund acquired on or after 1st April 2023, so this date is only for the debt mutual fund, or directly clearly mentioned, or market linked debenture. A capital gain will always be a short term. Calculate capital gain, full value of consideration is your on transfer, redemption or maturity minus transfer expenses, cost of acquisition. It will always be a short term capital gain. Now guys, STT is not allowed, because STT is not allowed under capital gain. It is clearly mentioned in the 7th proviso to section 48. And 7th proviso to section 48 of capital gain says that STT is not allowed in the capital gain. After that, MLD. Now question is that what do you mean by the market linked debenture? Here I have mentioned market linked debenture means security which has an underlying principal component in the form of debt security, and where the return are linked with the market return. Return are linked with the market return, that is called your MLD. Now there is no need to remember the definition. Now question is, sir, debt mutual fund, you are talking about debt mutual fund. What do you mean by debt mutual fund? But before understanding debt mutual fund, let's first understand equity oriented mutual fund. Guys, equity oriented mutual fund means mutual fund where mutual fund company invest 65% or more of total proceed in the equity share of domestic company, that is called equity oriented mutual fund. Try to understand. If there is any mutual fund company, suppose for an example, Kotak Mahindra, they have one mutual fund scheme. Now in that scheme, they receive the 1000 crore. Out of 1000 crore, if 650 crore or more, that is 65% or more, invested in the equity share of the domestic company, that mutual fund is known as the equity oriented mutual fund. But now question is that, sir, if less than 65%, is it will be treated as debt? Answer is no. Debt mutual fund they have defined here. They have not mentioned word debt. I am mentioning the word debt. They mention specified mutual fund. And they mention that specified mutual fund means when mutual fund company invest in the equity market is 35% or less, that will be the debt mutual fund or a specified mutual fund. So guys, now I can say that there is a three category of the mutual fund. You can say that one equity oriented, one debt oriented, and one you can say that mix or hybrid for a time. Just understand as a hybrid. Now in equity oriented, when 65% or more mutual fund company invested in equity market, that is equity mutual fund. When 35% or less invested in equity market, that is called debt mutual fund. And when more than 35% but less than 65%, that will be known as the hybrid mutual fund. For your example, for your understanding, just remember as hybrid mutual fund, because in examination, examiner may test on the mutual fund this time. They may ask the 5 marks question and the mutual fund, how it will be the taxability. So just remember there are three type of mutual fund. One is the equity oriented, means 65% or more invested in the equity market. One is the debt oriented, means 35% or less invested in the equity market. And one is the hybrid, that is more than 35% but less than 65% invested in the equity market. Now we are discussing what will be the tax treatment on all three mutual fund. Try to understand. First we will discuss about equity oriented mutual fund. So guys, if you remember equity oriented mutual fund, there is a long term capital gain on equity oriented mutual fund. Period of holding will be 1 year and it will be taxable under section 112A at the rate 10% in excess of 1 lakh. And if there is a short term capital gain on equity oriented mutual fund, that will be taxable at the rate 15% under section 111A. Understood or not? Yes. So that is clear about equity oriented. Now let's discuss about debt oriented mutual fund. And suppose debt oriented means 35% or less invested in the equity market. And guys, this debt oriented mutual fund, suppose if purchase on or after 1st April 2023, then whatever the period of holding, there will always be a short term capital gain and there is no indexation. Short term capital gain and there is no index. But guys, if that mutual fund purchased before 1st April 2023, if before 1st April 2023, then this amendment is not applicable. Period of holding is 3 years. If it is long term capital gain, taxable at the rate 20% and index benefit is also available. And short term capital gain, then taxable at the rate slab rate. You got my point or not? Now hybrid mutual fund. Hybrid mutual fund means it is not a debt, it is not a equity. Means it is not covered in 50AA as well as it is not covered in equity oriented mutual fund. Hybrid mutual fund, guys, even it is acquired before 1st April 2023 or after 1st April 2023, if period of holding is 3 years, if there is a long term capital gain, taxable at the rate 20%, index benefit is available. And if there is a short term capital gain, taxable as per normal tax rate. You understood or not? If you have any doubt, then you can tell me. No doubt, directly check the question 1 of the RTP. That is the question number from your RTP. Just check one question from your RTP. Question number 15. Question number 15 from your RTP. Check question number 15. Please don't discuss. Just do the question number 15. Don't check the solution. Try yourself. Don't check the solution. Without checking the solution, just check the question number 15. Okay. I will discuss. Don't worry. I know that you will not discuss. You will not check. Okay. So Mr. Sanjay is a resident in India, age 55 years, had an impressive investment portfolio in the various mutual fund. So Mr. Sanjay, he is having the impressive investment portfolio in the various mutual fund. He redeemed his entire mutual fund investment portfolio and bought a villa in Lonavala for a 2 crore to spend rest of his life there. The detail of mutual fund are as under. So there is a one person, Sanjay. You heard about Lonavala? Lonavala is one place near to Mumbai, hill station. Like you always visit Pondicherry, na, from here. Chennai people go Ooty and Kodaikanal. So the hill station, Ooty is a hill station. Okay. So near to Mumbai, we have one, the name is a Lonavala and Khandala. You heard about Khandala? Oh, there was one song of the Amir Khan, you know. Hey, kya bolti tu? Aati kya Khandala? You don't heard about that song? Oh. 12th Fail movie. But 12th Fail movie is not in Lonavala. That 12th Fail movie is like from Delhi side. That is, his study was in Delhi only. Lonavala is one place near to Mumbai. Not that good place, but it's for Mumbai people, it's good. Because in Mumbai we have the sea and here we have the mountain. So near to Lonavala, 100 kilometers from Mumbai. But there is no link in this question to give the detail of Lonavala. Examiner will not ask you to just draw the map of Lonavala. Yeah, what is the distance from Mumbai? So guys, Sanjay is resident Indian, 55 years age. He sold his all mutual fund and he is purchasing one villa in Lonavala for the 2 crore. By the way, I am also constructing my house in Lonavala, so you can visit, okay? Whenever you visit. Huh? Party, yeah, party place. After clearing CA, you can visit, okay? So, construction will be completed within 6 months, so you can visit, no issue. Huh? Like within 3 years, don't worry. So they are saying that to claim the 54F exemption because he is selling his portfolio. And so he purchased already, na? So within 2 years he purchased, don't worry. Okay. So now he sold various mutual fund. One is the BLR Growth Fund. Date of investment was 3rd April 2020. Date of redemption is 5th June 2023 in the current year. Amount invested 120 lakh and amount redeemed is 140 lakh. So there is a 20 lakh gain. We'll see which types of this mutual fund they have given in extra information. ABC Strategic Mutual Fund. 4th May 2023 he purchased and 2nd Feb 2024 there is a redemption. 46 lakh invested, 50 lakh redeemed amount. ABD Midcap Fund. 2nd 12 2022 purchase. 5th July 2023 redemption. 115 was cost and 118 is the redemption amount. SBA Growth Fund. 8/11/2021 he purchased. 12/12/2023 there is a redemption. 1110 was invested and 120 is a redemption. Now, the fund stated at 1 and 2 have invested the 30% of their proceed in the equity share of the domestic company. So guys, 1 and 2, can I say that 1 and 2 are debt mutual fund? Debt mutual fund. So there may be possibility that section 50 AA may apply. We'll check it. And guys, and fund stated in 3 and 4 have invested 70% of their proceed in the equity share of domestic company. So can I say that 3 and 4 are equity oriented mutual fund? Equity oriented mutual fund. The investment pattern of fund remain unchanged over all the years. STD is paid at the time of acquisition and redemption of mutual fund wherever is applicable. You are required to compute the capital gain chargeable to tax in hands of Mr. Sanjay for the assessment year 24-25. And guys, they have given you the index number also. Now, First, we will discuss about the equity oriented mutual fund. Guys, in case of equity oriented mutual fund, your period of holding, we will check of the 1 year. In case of equity oriented mutual fund, because if you remember the types of capital asset, I have mentioned in the capital gain, okay, in case of the listed security, other than units, or in case of the like listed security, in case of the UTI units, and in case of the equity oriented mutual fund and zero coupon bonds, we have to check the 1 year period of holding. In case of unlisted share and immovable property, we will check the 2 years period of holding, and all other asset, we will check the 3 years as period of holding. So guys, here we will check the 1 year as a period of holding. Now check. On 12 December, you have acquired 22 and transferring on the 5th July 2023. Period of holding is long term or short term? Less than 1 year. So there is a short term, and here your capital gain is a 3 lakh. Huh? Can I say that this 3 lakh is going to be taxable under section 111A at the rate 15%? Huh? It's very clear. Now second, SBA Growth Fund 8/11/2021, redemption on the 12/12/2023. This is the long term, more period is more than 1 year. So here guys, 10 lakh is a profit. Can I say that this 10 lakh will be taxable under section 112A at the rate 10%? In excess of the 1 lakh. Here also index benefit is not available. In case of 112A, index benefit is not available. In case of 112A, index benefit is not available. Now we'll check about debt mutual fund. Now guys, these two are the debt mutual fund, but guys, this BLR growth fund, they have purchased this BLR growth fund in 2020. So can I say that 50AA section is not applicable? Huh? When it's not applicable, so we will calculate capital gain as per normal provision. Now, on 3rd April 2020, they have purchased, and 5th June 2023, they are selling. So can I say that period of holding is more than 3 years? Huh? So more than 3 years. So here capital gain will be long term. And 140 minus index cost of acquisition on 120 lakh, you will calculate the indexation also. Yes or no? Yes or no? Now guys, ABC Strategic Fund, this fund, but this is acquired on 4th May 2023. So can I say that here section 50AA is applicable? So whatever the period of holding, there will always be a short-term capital gain. So here guys, 50 minus 46, it will be a short-term capital gain. It is going to be taxable as per the slab rate. But guys, this long-term capital gain will be taxable at the rate 20%. You got my point or not? Yes or no? Just check the solution of this question. And if you have any doubt, you can ask me. Just check the solution of this question. And if you have any doubt, you can ask me. Yes, people. Done? Any doubt? Any doubt? MLD is silent. So MLD, whenever there is a redemption, always short term. Even it is acquired before or after, whatever date. MLD, if they ask you MLD, always short term. No indexation. Obviously, there is a debenture. So in case of debenture, indexation anyway not applicable, but tax rate will be a short term. Guys, anyone, anything? Hey guys, you know that in the TDS there is a one section 194N. What is the N for? Note. Note currency. That is cash withdraw. If you remember 194N, then you know that in the 194N, we have discussed that if you withdraw any cash from bank or cooperative bank or any post office, then TDS is applicable on cash withdrawal if cash withdrawal in a year is more than 1 crore. So if more than 1 crore, then TDS is applicable at the rate 2%. Say 2%. So cash withdraw from the bank, cooperative bank or post office and aggregate cash withdraw in a year is more than 1 crore, then TDS is applicable at the rate 2% in excess of 1 crore. In excess of 1 crore. Means up to 1 crore TDS is not applicable. In excess of 1 crore TDS is applicable. Guys, in the TDS topic, there are only two sections where it is mentioned that up to this amount TDS is not applicable. In excess amount TDS is applicable. One is the 194Q. Under section 194Q, up to 50 lakh purchase TDS is not applicable. In excess of 50 lakh TDS is applicable at the rate 0.1%. And one is this section 194N. Cash withdraw up to 1 crore TDS is not applicable. If more than 1 crore, then TDS is applicable at the rate 2%. Now guys, there is one amendment in this section. In case of cooperative society, if cooperative society withdraw the cash, then this limit is raised to the 3 crore. Means instead of 1 crore, the limit is a 3 crore. So if cooperative society withdraw the cash, then this limit is a 3 crore instead of the 1 crore. So that is one amendment. Now guys, one more point. Suppose for an example, account holder has not filed the return for the last 3 years. And all the 3 years return filing due date is already expired. Means account holder not filed the return for the last 3 years and all 3 years return filing due date is already expired. So you will check the 3 years means for the current year. Current year is 23-24 previous year. Just ignore the previous year 22-23. Just you have to check the previous year 21-22. Previous year 2021 and previous year 1920. For all 3 years, a person has not filed the return, then guys, instead of the 1 crore or 3 crore, limit will be the 20 lakh. Means up to 20 lakh, there is no TDS. More than 20 lakh, up to 1 crore, or in case of cooperative society, up to 3 crore. Means more than 2 crore. More than 20 lakh up to 1 crore and in case of cooperative society up to 3 crore. TDS rate will be 2% and in excess of 1 crore or 3 crore, your TDS rate will be 5%. In excess of 1 crore in normal case and in case of cooperative society, excess of 3 crore, your TDS rate will be 5%. You got my point or not? Yes or no? And guys, in that section, it is mentioned that in some cases, TDS is not applicable. Suppose if any government withdraw the cash or bank withdraw the cash, cooperative bank withdraw the cash, any ATM operator withdraw the cash, then TDS is not applicable. CRA, that is cash replenishment agencies, that CRAs withdraw the cash, then TDS is not applicable. Any money changer, if money changer withdraw the cash, then TDS is not applicable. Any dealer or trader working under the APMC, that is Agriculture Produce Market Committee, if that person withdraw the cash, then TDS is not applicable. Now just check the question number 12 from your RTP. Just check the question number 12 from your RTP. Yes, people. हाँ. 3 साल. Sorry. All 3 years. All 3 year. If you have not filed, then this section is applied. Done, people. Hey, you have completed that black money lecture or not? I have uploaded on the YouTube also. Huh? I have uploaded the black money lecture on the YouTube and tax audit lecture for the English medium student also. There is a one channel for the English student, that is BB Virtual English करके, ठीक है? Just follow that channel. You will get all content in English only. If you're not able to understand Hindi. Okay. Any doubt in that MCQ? No doubt. What time you need the lunch break? Suppose if you have not filed the return, then in excess of 20 lakh, there will be a 2%. And in excess of 1 crore or 3 crore, it will be a 5%. चेक कर वापस. पक्का ऐसे हाँ बोल दिया, समझा? चलिए. What time you need lunch break? 1 o'clock or 1:30? मुंबई में ऐसा मैं कोई फेस टू फेस पढ़ाता नहीं हूं, तो I don't know what time people have lunch. Here in Chennai, what time you have the lunch? 1 o'clock you used to have the lunch. Okay. Then just take the lunch break now. So I will start at 1:30. Okay. So you have approx 37-minute lunch break. Okay.